apreciándose, euro y pound mixtos y criptomonedas 109.000 para Bitcoin al lado de estos nuevos máximos históricos. Ethereum.
Escuchando las noticias. Buenos días. Espero estén muy bien. Vamos a ver la sesión de bolsa en vivo. Hoy es un día, después de los días positivos que hemos tenido, lunes y martes, hoy miércoles es un día de pain, en el sentido de que la mayoría de intradía está en rojo. Ahorita voy a explicar eso. Mientras tanto, tenemos los índices pues relajados, o sea, está la sesión abierta en este
2000,
momento.
sí.
Ahí. La sesión está abierta en este momento y no hay mucho, miren. Voy a ponerles esta. Es una empresa que el costo de compra fue $1.50 y vean, estoy $46 abajo. Ahorita creo que hasta el costo fue hasta mayor, pero bueno, ahorita checamos eso. Miren los índices, punto 28, punto 17, punto 52 para Nasdaq, punto 27 para Russell 2000. Un día normal, recuperado, aunque me llama la atención esto, que ayer estábamos en 74, ya estamos en 75 en Extreme Grade. Eso significa codicia extrema, entonces los inversionistas están más dispuestos a comprar que a vender. Entonces, pues, sería cuestión de esperar. Sobre volatilidad, miren, 45. Ya su mínimo ha pasado a 45, después de que estábamos en 50, y pues vean, ¿no? 45 de volatilidad. Va. ¿Qué significa? Pues que no hay mucha volatilidad en el sentido de que está bajando. O sea, tener la volatilidad en 55, en 50, 48 y ahorita su mínimo de 45. Perdón. Significa que la sesión del mercado está tranquila, inclusive los días anteriores. Y vean, en cambio, Bitmain, vean nada más, una caída tremenda, 50%. 50% de caída, imagínense. A ver, vamos a ver el precio del Ethereum. Y el Ethereum ya, 2600. No puede ser. Muy mal. Pero bueno, ahorita las que estoy vigilando es PROC, porque está a la baja, hay una pérdida, ahí se está arrastrando una pérdida. O sea, en sí las acciones se planean mantener, solo que hay que tener cuidado. RXST es otra, pero esa está positiva. Sí, de hecho esa va a estar positiva, esa creo que va a ser esta y otras tres, o sea, tres en total van a ser las positivas. Mientras tanto, es Game, también está negativa porque el costo de compra fue aquí, justo. En 2.59, pues andamos en 2.15 y está bajando, ¿no? Entonces imagínense. Entonces esta va al alza porque se compró como por acá. Esta va a la baja. Y me falta SubGP. SubGP. A la baja. Pues también igual se compró por aquí, unos 50, unos 60, pues imagínense. En sí básicamente es un mal día hoy para el intradía, pero pues así hay días malos y buenos, hay que controlar las emociones, el carácter, todo lo que se requiere, ¿no? ¿Qué más? ¿Qué más? A ver, vamos a checar unas cosas en lo que
to happen. You get incremental buy-in from investors, and when that happens, you'll start to see that move downstream. To your point about the valuation, the largest banks trade at the median valuation they've traded at since the great financial crisis. The mid-cap banks are 2 PE multiples below their median level over the last 12 years, and the small-cap banks 3. So there's more upside potential in those banks. And when M&A picks up, I think that's where you get some real excitement, where we've seen some green shoots, at least early green shoots there on M&A.
Yeah, looking forward to additional color for next week's earnings. David, thank you.
Thank you very much.
We are getting some breaking news out of the DOJ, and for that, we're going to turn to Eamon Javers. Morning, Eamon.
Hey there, Carl. The Department of Justice has just unsealed a criminal indictment of sports and commercial real estate executive Tim Leiweke. The charge here involves Leiweke's alleged participation in a bid rigging scheme related to construction of the $375 million event arena at the University of Texas at Austin, known as the Moody Center. Now, according to the indictment, Leiweke, as CEO of the developer Oakview Group, allegedly entered into an agreement with another potential bidder for the arena to drop a competing effort in exchange for lucrative subcontracts at the arena. Documents say Liwicki allegedly reneged on that promise and did not come through with the subcontracts, as he had suggested, allegedly. Now, according to two sources familiar with the matter, the Antitrust Division of the Department of Justice is also expected to announce non-prosecution agreements with two other entities here, stadium operations company Legends Hospitality, which is expected to pay a $1.5 million penalty, and Liwicki's own company, Oakview Group, which is expected to pay a $15 million penalty. We'll reach out to all of the parties here for their comments. Carl, back over to you.
Interesting wrinkle there, Eamon, as we continue to watch the money surrounding sports. Eamon Javers in Washington. As for the markets, we did lose a bit of an early rally, but hanging on to some gains. VIX still very subdued, just above 16. We mentioned the bank earnings next week, but we're going to get Delta tomorrow and then Levi tomorrow night. So sort of a soft launch of earnings season.
And certainly bellwethers for just the macro picture, how everybody weathered the 2Q tariff turmoil. Expected to be huge for trading, though, for the banks.
Right. And then as we are sort of in a light macro data week, we'll watch bonds, but a little relief on the yield front today with the 10-year back below 4.4. Let's get back to Post 9 and the judge with the half.
Come on. Oh, good. Come on.
All right, guys, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The first $4 trillion company, NVIDIA, hitting that major market milestone. We discuss and debate what stocks to best own right now with the committee. Joining me for the hour, Joe Terranova, Steve Weiss, Jim Lebenthal. Bryn Talkington along in just a moment, because with NVIDIA hitting $4 trillion, we have to hear from her, too. We will check the markets. There we are, green across the board. NASDAQ at a new high, guys. Joe, the NASDAQ's up almost 40% from its April low. We'll call it 39%. That is remarkable in and of itself.
This is a big story, and I know a lot of people, middle of the summer, NVIDIA hits $4 trillion. This literally underscores and highlights the biggest argument right now in the financial services industry. What's the bigger risk, concentrating or diversifying? NVIDIA hits $4 trillion. There are 5 companies right now with a market cap greater than $2 trillion. Then you have 8 companies with a market cap greater than $1 trillion. But how about this? Palantir is the 24th largest company in the United States. It has a market cap of $330 billion. To get in the top 25, all you need is $300 billion. That's Coca-Cola. So it underscores how over the last several years we have had this dramatic, concentrated performance from these AI leaders. Look, the AI leaders right now, and they're all above $1 trillion. It's NVIDIA, it is Microsoft, and guess what? It's also Broadcom. Those are the top 3. But you have to ask yourself as a portfolio manager if, in fact, you can actually concentrate. We all talk about, well, we have a portfolio on the show. The Joe T has 125 stocks. Joe T isn't going to have 8 stocks or 10 stocks. And that's why the last several years, the overwhelming majority of portfolio managers are underperforming their benchmarks because the performance is so narrow. And that really brings the question, where's the risk? Do you just diversify and underperform, or do you actually concentrate, participate, and then at some point, the other shoe drops?
If you've concentrated, we'll call it that, Weiss, NVIDIA is up 89% from the April low.
Yep.
I said the NASDAQ's up 40, okay? Meta's up 66% since the low. Amazon 48, Microsoft 46. Alphabet and Apple are below that at 25 and 24 respectively. But that underscores for everybody where the concentrated, to Joe's point, bet has worked big time.
Yeah, and while I'm a proud investor in Joe T and diversification, that's diversification for my portfolio because to me, and Warren Buffett will tell you this, the great investors will all tell you this, Dave Tepper, diversification is the enemy of performance. So you do your work, and you stick by those names in a concentrated portfolio. So my weightings are in big cap tech. There will be periods of time that I underperform, as earlier this year. But given the bottoms up fundamentals of those companies, whether it's Meta, whether it's Microsoft, pick them, they will continue to outperform because they've got balance sheets. They've got a dominant market share that is growing. The only thing getting in their way, and that would be short term, is if the government comes and says, you got to break them out, and that's supported by a judgment. I don't think that will be the case. But even then, I will tell you that some of the parts are worth more than the whole. So I continue to keep my focus there, my concentration, and the 4 big names. I mean, they're close to 50% of my portfolio. They weren't when I went in, but they've grown. I've weeded out some of the others. So I recognize the risk here. I recognize the overvaluation, 30 times forward earnings for Meta and for the others, but I'm also comfortable with it because overvaluation is a moment in time. The fundamentals catch up.
Diversification for diversification's sake isn't a winning strategy, right? And this is a different kind of market than, you know, many of you grew up with.
Yep.
You have such a powerful trend in AI that it has given investors every reason to not be overly diversified to the points that were made here. The question is, after this incredible run, what do you do now?
I think you can find a degree of diversification. I don't think it has to be all Mag 7 or even all tech, but I would take this in steps. So within tech, you can get diversification. You can get diversification into AI adjacent stocks that maybe haven't run up as much. Cisco, Oracle still has some room in the tank, if you ask me. You can get into the value-y tech stocks. The Googles, IBM is performing well. You can go into other sectors that are performing well right now. Now, I want to start with what I would avoid. Utilities and staples are overpriced, and even if the market goes down because of their expensiveness, I don't think they'll be defensive.
That's not traditional diversification.
Let me too quick.
No. That's not too quick.
Just slow down. Okay, there are sectors outside of tech, outside of the concentrated area.
Necesito otra compu para tenerlo aquí y otra pantalla.
Financials, industrials. You can go there and you can make some very good returns. What I'm saying here in the gradation of diversification, I agree, just diversifying and saying, I got to have 3% in utilities because the S&P 500 has 3% in utilities. Thumbs down from me.
I want to hear Joe's point. Go.
So you can't underscore the fact that the last several years, the prevailing tailwind and arguably the saving grace of the market has been AI. If we have an AI, where would this market be? So then you can't say, okay, I'm going to diversify with other AI adjacent names. That's not pure diversification. You could maybe say, I'll insert a JP Morgan, I'll insert a Berkshire Hathaway, I'll insert a Walmart or an Eli Lilly. That gives you a degree of diversification. But if you're staying with the AI thesis and the surroundings of technology,
I was taking it in steps. I started with the AI adjacent. I moved to different sectors. Your point, I agree with. I was taking it in steps because we started out with the rallies concentrated in AI. I said, just take it in steps to get diversification. And I did stop because there are sectors that I just don't think you need to be in.
You know, let me make this point. Even if you think you're diversified by just owning the S&P, that diversification has taken a major hit because if we go back a decade or so, you'll see that info technology, which is a lot of the companies we're talking about, was only 10% of the S&P. Now it's 32%. So you're going to have to look outside that to diversify. Now, it's a greater diversification than I have, but also, you know, when you take a look at managers, 75 to 80%, to your point, underperform the S&P every year. And guess what? It's not the same. A lot of them are the same, but my point is that even those that have outperformed just said, oh, they come on and say, oh, I'm going to overweight tech or I'm going to underweight this, which to me is a bunch of...
O sea, están hablando de la situación con la inteligencia artificial, de que pues tenemos un keep riding, o sea, seguimos arriba, seguimos literalmente montando los comercios, las compras y las ventas, el apetito por la inteligencia artificial. Y arriba están hablando, y hace un momento igual en la CNBC, de que Nvidia ya alcanzó los $4 trillones en capitalización de mercado. O sea, por mucho tiempo Apple fue el rey, hace 3, 4, 5 años, y ahora es Nvidia. También Nvidia hace rato la estaba checando, o sea, no está mal tener una posición a largo plazo, o sea, vean, 162, cuando recuerden que en abril costaba 86, cuando fue lo de los aranceles. Claro, 80 y lo habíamos dicho, 86, 80 y 80 son 160, $172 para que te dé el 100% de tu inversión. Y eso y cuando el TQL, el ETF de la tecnología lo había hecho en menos de dos meses y 4, no. Bueno, sí, literalmente 3 meses, 2 meses y medio, 3 meses, el TQL ya había dado el 100% de inversión. Entonces, por eso es bueno comprar cuando el mercado está tocando fondo. Y ya después vender y pues literalmente duplicas lo que colocas. Pero bueno, ahorita estoy checando el calendario de la FDA para saber, porque todas estas que estoy colocando son, necesito algo barato, esta me convence. Rep L, tengo que investigar más, porque el 22 de julio le van a dar una autorización. Le van a dar granted predictive review with prescription drug use action date. The license application acceptance. Para anunciar una licencia de aplicación biológica. Melanoma, para avanzar en los melanomas, es cáncer. Ok. A ver. ASND. Muy cara. Y digo muy cara porque es el riesgo. O sea, la idea es encontrar una empresa pequeña con gran potencial. Y la única que ahorita he encontrado es esta. ATXS, no. Ok. Y tengo PTST. PTST. 48, no es legible. Y tengo de nuevo RegN. RegN la acabamos de buscar. Aquí está. Pero vean, o sea, son $500. O sea, no manches. O sea, inclusive, a ver, en abril, ¿dónde estaba? O sea, en abril, o sea, está tocando más fondo ahorita que en abril. O sea, no manches. De veras, UNH, ¿cómo va United Health? 300, se ha mantenido, todavía se mantiene, no explota. Ok. Entonces, esta Rep L 22, que por cierto lo tengo que poner en el calendario, va a tener un evento económico ese día. Entonces faltan, Rep L son 22 de julio, faltan bastantes días. Son 5, 6, 7, 8, 9, 10. En 10 días va a ser el evento. Necesito borrar esto. Yo creo que un trapo va a ser más sencillo. Y aparte necesito un pizarrón más grande. Voy a poner esto mientras.
It's a September cut. It's not going to happen in July. It's not going to happen in this meeting. There's no August meeting. Then I think they start guiding towards that cut. And that sets you up for possibly 2 cuts this year if the data stays as is. So the data's been pretty solid and the inflation data's been pretty positive. So I think that that's what the Fed's doing, which is complete, a complete, I don't know, leaving behind of all the SEP that we just saw. So, yeah, I think the Fed minutes might be a market mover, Tom.
Yeah, Fed minutes, and then I think the CPI and PPI next Tuesday and Wednesday could be triggers because Fed Chair Powell and a couple of the other Fed governors basically said that the lag effect isn't going to start showing up until this data point, and those numbers have been pretty weak. And Kevin mentioned, they expect GDP to go to 1.4% from 1.7% this year. Well, if the market and the economy is doing this well and the jobs market's actually improving, they're going to be wrong completely, in my opinion, Alex.
Well, I think the important thing is that, one, I'm going to say I completely agree with Kevin that I think they're going to use this meeting and then Jackson Hole to set up a September, probably 25 basis point cut, and then you'll probably get one in December, assuming things stay on this trajectory. I think regardless of what they say, I do think that they try to lay out a path 6 months in advance or so and kind of follow that. It's just been the pathway under Jerome Powell. Now, they don't say those words that clearly, but you just look at how long it took them to, start raising rates, how long it took them to start cutting rates. It's just sort of how the MO is gone for them under Jerome Powell. Now, the one thing I would say is you do see a large disagreement on the SEP and the dots, and that makes sense, right? Because if you are very bearish on the economy and you think that there's going to be a growth, trajectory that goes lower, well, interest rates are too high right now, and you're going to price in several cuts. But if you think things are going to be relatively resilient, maybe you get a couple, maybe you get none, maybe those couple happen next year. I mean, I'm just going off what Jerome Powell himself has said. He says that he thinks we're in moderately restrictive territory, which would mean all else equal, probably they do need to normalize slightly lower. But you go out to SR3 Z26, which is basically just where the market is pricing interest rates to be at the end of next year. It's around 3%, 3.25%. Well, for us to get to that level, if it's going to happen in a smooth trajectory, then it's going to be these sort of subtle adjustment cuts, and that's kind of a good thing. But if it happens rapidly, it's going to be a situation where things got worse economically, and they're reacting to something.
Right.
You should not be rooting for that. That's a bad outcome for equities.
Right.
So what has the last 2 years been? The last 2 years has been positive surprise for data, which meant interest rates stay higher. And what does that mean for equities? It meant all-time highs.
Yep. Climbing the wall of worry is what we're doing right now as far as equities goes, because everybody says we're in a restrictive territory as far as interest rates goes. It's not showing up yet. And if the unemployment rate continues to remain at 4.1, 4.2%, jobs data is beating expectations a little bit. And inflation's capped at this point. Do they need to do anything? That's going to be the question. Kevin, I wanted to get your take here real quick on that pop in copper to all-time highs yesterday, pulling back here nearly 4% in today's session, 50% tariffs. Do you, think that's going to cause any consternation here besides maybe for some of the miners?
Yeah, that move yesterday was violent. Yeah. As you saw, it rallied to about what? I think the high was 589 in copper futures yesterday, and then it's come off, now trading about 546. It kind of came out of nowhere, right? They didn't give us much warning. They didn't talk about, hey, we're going to talk about copper. They just kind of threw that at the markets. And, this is another, this is the Trump administration controlling or, protecting U.S. commodities. And so, it's all about copper is very big in housing, as you know. And housing stocks are actually having a pretty nice day today. Why? Mortgage apps jumped. But copper's a pretty big input when it comes to housing. I'm surprised that there wasn't more of a response there, but the response in Freeport-McMoRan and copper futures, violent, Tom.
Yeah, U.S. only produces about 5% of global copper mining. It's used in industrial, it's used in your phones, it's used in a lot of applications, so we'll continue to watch.
It's a big product, too. That was like a $10,000, $12,000 move.
Yep, that was massive as far as that move yesterday on the announcement of the tariffs. All right, guys, let's take a quick break here. When we come back, we're going to get into a discussion about Microsoft. The stock hit fresh all-time highs today. Oppenheimer upgrading the stock. Where was this guy been? Stock's been hitting all-time highs for the last couple of weeks. Stick around.
Ok. Pues quedó mejor, pero hace falta literalmente el plumón para empezar a escribir. Y que se pueda borrar, claro, ¿verdad? Ouch, mis dedos. Luego me ando machucando. Ok, a ver. A las 11 y media me haré mi próximo café. Porque tengo una reunión a las 12:30. No, bueno, en sí es a la 1. Pero con que me desconecte al cuarto ya me da tiempo. Entonces, con eso. Y a las 2 tengo otra, entonces obviamente ya no voy a volver. Ya sería hasta mañana. ASBP. Ok. Claro.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper
that
understanding
you'll see a resurgence in the economy as soon as we get the tariff situation settled. So I don't regard this as expensive. In the old days, it probably was an inflated multiple, but under the new valuation paradigm in the market, where I would argue that the market's insensitive to valuation, this to me was a compelling buy when I bought it. And then, as I mentioned, I think last week before, I sized up the position to a core position. Now, I went more into the XLI because I'm doing work on a number of components in the XLI. And before I'm able to do my work, I think you continue to see a move upward. This is breaking out. So I wanted to add to that position to participate.
I mentioned Disney, 140, goes to 140 from 125. That's at Citi. They still want you to buy it. We believe earnings will focus on performance of domestic parks, direct-to-consumer profitability, and the upcoming launch of the ESPN flagship product. Jimmy, you own it again, 49% since the bottom.
That was a pretty strong list of positives that you just went through from the analyst, and I totally agree. There's a lot of shots on goal here. Now, the stock right now is consolidating in this $120 to $125 range after the gains that you pointed out, Scott. I think probably that it's not going to do too much other than this range until the next earnings report comes out. It trades at around 20 times a forward multiple. That's not cheap. It's not terribly expensive, but for it to go higher from here, it's going to have to outperform on earnings, which it's done solidly for the last 2 years. And based on all the things that you just listed, which I totally agree, I think it will continue to outperform on earnings. Steve, you just mentioned a resurgence in the economy. People are going to go, they already are going on the cruise lines. They're going to Disney World, Disneyland. It doesn't matter what the ticket prices are. They are going. It'll show up in earnings.
There was a downgrade the other day of Netflix for no other reason than the stock has just been one of the best in the market for this year. And it is up 46% since the April bottom. There's your year-to-date chart, which is, you take that period out, obviously. It has been a place to play offense and defense. Joe, I'll give you this one. Citi reiterates it neutral today. They've had a huge run. We expect Netflix to report its revenue and EBIT modestly ahead of sell-side estimates.
Yeah, but then the following quarter after that, I think you're going to see an uptick. The content, the suite of content for the end of 2025 looks excellent. The live sports programming, I think you stay with Netflix, and any opportunity you get to buy it on a dip, you want to do that. I would also put Spotify in that same conversation. Both of those stocks are slightly higher today. Both of those stocks last several days have had mild corrections.
All right, financials. I want to talk about those two because they've played a big part. Certainly JPM and Goldman have. That's why financials as a group have been at a record high as well. They report earnings next week. You guys already know that. Several downgrades yesterday, a week ahead of the earnings. Now you get some upgrades. KBW says JP Morgan and Morgan Stanley outperform. Jimmy, you want to take JPM?
Yeah, I mean, I've said this for quite some time that if you're going to own any of the financial stocks, and this goes for any sector, frankly, you have to own the best of breed. I do think JP Morgan is at the top of the list. We can argue about whether Goldman Sachs or somebody else, but, it's in that category. Then after that, you fill in around it. Now, JP Morgan is not cheap relative to the rest of them, but that's okay. It is the leader. And what we've seen with JP Morgan is when things go wrong in the financial sector, not my prediction, but that they come out of it looking stronger. We can look 2 years ago when they picked up First Republic and the assets there. That's the beauty of being the biggest and the best in any sector. So I do like JP Morgan here because fundamentally, I like the financial sector with less regulation and with a booming economy.
Vean eso.
B of A says of the earnings that are coming up, the stocks are likely to need support from positive EPS revisions.
Es un golpe muy fuerte.
They do obviously like the large cap U.S. banks. It just brings you back to what Mike Mayo has always said, right? Goliath is winning, I think was.
Y a partir de las 10:30, 11 ya se empiezan a cansar este tipo de movimientos. Porque hay muchos que si llegan a subir, bien.
Well,
por ejemplo, esta sí subió.
No surprise that that one's been
Pero
doing
vean,
well.
o sea, ya se cansó.
Ya M&A is up 6% year on year. We're seeing a little bit of a turnaround. May was a very strong month as it relates to M&A. Investment banking has been very strong. I always talk about the engagement of the retail community. They are participating in the markets. I think the other thing that's benefited a lot of these large money center banks, and I'm of the belief you stay with them in terms of positioning. I'm obviously long JP Morgan personally, and through the ETF, I'm long Goldman Sachs personally. But you stay with this. I think the other thing that has happened is you have seen a positioning rotation. 6 months ago, we were on this desk talking about the financial sector, about what? Insurance companies and the strength of insurance companies within the financial sector, whether it was Progressive or Travelers. Look at the charts of all these insurance companies. Property and casualty insurance brokers have rolled over. Where have the capital actually gone? It's gone into the money center banks. It's not going into regional banks. Regional banks right now somewhat conflicted in terms of where their near-term direction is.
You have a lot of those.
I do, and the ones that are working, Huntington Bank is working. I know that got a downgrade. Citizens Financial is working. M&T's working. But I have others that aren't working. Regions, super regional, USB not working.
Are they going to work in this? Are they going to work in the second half?
I don't know that we're going to see the fundamental tailwind in any of these. Right now, my sentiment surrounding regionals is somewhat unsure about the direction that they're going to take, because I don't see conviction in the earnings or conviction in the technicals
themselves. Why own the regionals when the strongest tailwinds are in the larger banks?
So the regionals
for the upside, for the upside that you haven't gotten.
But
like, where's the outperformance going to come from here?
I think the upside's muted, and that's the point I'm trying to make.
I think from a fundamental perspective, I agree with you. I want to have the ownership of the large money center banks over the regionals, but I understand why the strategy went into the regional banks. It had a strong lift at the end of the year on the belief that the regionals would get strong regulatory relief and earnings growth on a favorable economic environment. I don't know if that's been reality or not.
I want to point out, a lot of times people like me and others talk about deregulation. We kind of throw it out there. Let's put some more detail to that. The stress test that came out from the Fed a couple of weeks ago made it clear that these companies are well capitalized and they're going to return capital to shareholders. You also have the supplemental leverage ratio, which looked like it's going to be reduced or at least taken away, which gives more room for these companies to return capital to shareholders. Those are the sort of things that we're talking about when we talk about deregulation.
Parece una buena computadora, ¿no? Para
Interactive Brokers, Robinhood, those three names. I think each one of them strong tailwinds behind them.
I just can't get. I keep looking at Robinhood and valuation can't get there.
All right, we're going to take a break. When we come back, Bill Baruch is going to join us. He just launched a new portfolio. We're going to tell you what's in it and how you can play it.
No manche, nos dejó una ganancia de $3.85. Por Dios. Mejor esperemos, no vale el intradía.
Nuveen invests with the foresight and vision to anticipate
porque yo tengo que checar
future generations.
Unos datos, a ver, aguanten.
That was, what did it hit at its low? $350. It hit at its low in April. You've got to be cognizant that it's not immune from overall market moves, and anything could trigger a sell-off, especially when the RSI is overbought on a technical basis at 72. That anything can trigger it, so staying risk-defined might be the way to look at this.
Yeah, and it's also expensive, so for a smaller account, it maybe is not the most approachable of stocks. I mean, to buy one share of this stock, if you didn't use margin, is going to cost you $500. Right. This trade, which, of course, has sort of controlling interest in almost, what would be equivalent of 100 shares, if it were to be assigned on that short put. But either way, regardless, the deliverable of the option is 100, so it has a little bit of a leverage component. Only requires $350. So you have a higher probability of success than if you bought shares. It's more capital efficient than if you bought shares. But you're also looking at a stock, to your point, that just went from 344.79 to 501 without really having a single downtick. Maybe you missed it, but you want to be involved. You do that neutral to bullish, risk defined. So if it does, and it will at some point have a pullback, you're not going to be exposed beyond what you knew was your max risk going in with this trade.
Yep, $350 max risk, and that's below 492.5. All right, good discussion here in Microsoft. Thanks to Alex Coffey, senior equity contributor, helping us out. But we're going to take another quick break. When we come back, Landon Swan from Mike Folio, he's going to join us. Take a look at sentiment data in Delta. The airline stock is off about 28% from its all-time highs that we saw just in January. It hasn't participated in this snapback rally as much as a lot of other names. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Nueva conversación, ánimo.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So we're talking Delta ahead of earnings tomorrow morning. It was a high flyer throughout the end of 2024, hitting those all-time highs at the start of this year, Landon. Rough waters right now here for Delta Airlines. I mean, what kind of data are you guys seeing? Because it feels like maybe people were pulling back. They cut guidance literally for the rest of the year. They lowered guidance for this current quarter. But are you guys seeing any data that's kind of reflective of this 28% pullback that we've seen since January?
Yeah, I mean, when you look at that last move from, what was it, 70 down to about 35, I mean, cut in half. That was obviously an ugly time for investors, and the CEO was fairly negative. I mean, he said, he talked about tariffs being the wrong approach, and he said we're acting as if we're going into a recession. And so, as an investor, that's not what you want to hear. And the stock has bounced a little since then, and then kind of flattened out at where we're at right now, so around 50 or so. So it's kind of in the middle between the low and the high, but not participating, like you said, like many of the other stocks out there. I will tell you, for a long time, the story at Likefolio Data was Delta and Southwest are the two leaders. Southwest has got the leisure personal travel. Delta's got the business travel. That's been kind of blown up, at least on the leisure side. Southwest has fallen down tremendously, but Delta's held its spot. It is definitely the leader in business travel, the leader in the premium premium international category. Very resilient type of customer there, whereas the leisure can come and go as the economy moves, but business is business. You got to get there. And what's interesting is you see that people are really talking about their more premium services, their Delta One, for example, which is the newer beyond first class. And so you can see that it's actually getting more attention than first class, Comfort Plus, all of those combined. So people are interested in learning more about that, and it's attracting customers. I mean, it's basically high class experience in the sky. I think we're going to move towards a 150 square foot studio apartments pretty soon, so that's going to be pretty popular. But we'll see when we get there. But yeah, it's I think that Delta has solidified itself as the premium, the international, the business class, and that's both of those. Premium and loyalty have both increased 7% on a year-over-year basis, which accounts for about 60% of revenue. And you can see here overall, the customer base is flying less. People are less interested, but Delta's doing the best of all of those. And as you can see, what I was talking about with Southwest, it's really falling off. So they need to make a change. They need to make a comeback. But focusing on Delta, they are, they're essentially the gold standard for business travel. They've got the top-rated punctuality and fewest cancellations. They have premium lounges. Their flight attendants are well trained to be attentive and friendly. They've got this partnership with American Express that's bringing in about $2 billion. So, and that's up 13% year over year. So they're doing everything right when it comes to attracting that premium customer. And then it's just a matter of what do people want. With Delta, you pay a lot and you get everything. With some of the other airlines, you can pay a lot less, but you kind of nickel and dimed, and you got to think about, am I taking this bag or that bag, or where do I want to sit, and all these different things. And Delta, you just pay a little bit more and you're taken care of. So with business, that fits really well. I think that they're well positioned to bounce back. What we really need to see, though, is a positive attitude out of the CEO on this call. I think that was it was a low point for the stock, and it's bounced back since. But I think people want to really see that he's talking about how they're doing well, business is coming back, business traveling is coming back, and they see a leg into more leisure travel. I think that's what people want to hear, especially now that most of the tariff stuff is likely behind us.
Landon, I think the focus on premium travel and how CEO Ed Bastian guides for the second half of the year with European travel, international travel by Americans, I think that's going to be key. This is a well-run company, but they couldn't dodge the slowdown at the beginning of the year in U.S. travel. But after their last earnings report, when they talked about that key word that's involved in the airlines, and that is capacity, and when they started holding levels of capacity flat, stocks made a nice recovery. Went from 69 to 34, now sitting just over $50. It was over 51 so far this morning. So, this is still a name that is one of the gold standards in travel. Ed Bastian's a great CEO. He does things mostly the right way. They've got a pretty healthy balance sheet, but these stocks are volatile even in normal times, Landon. But you mentioned how Southwest has fallen off. It's, and every airline seems to have their turn being in favor, out of favor. Delta is certainly in favor now. United is certainly in favor now. Some of the others aren't, Landon. I'd like to hear your thoughts on the overall sector of these names before, Delta kicks off tomorrow morning.
Yeah, I think, it's going to be so interesting to see how they set the tone for all the others, right? This is a very important earnings call. But you're right. It's always been sort of a rotating table of who's in favor and who's not, except for really, I can't think of a time, at least in the last, 8 or so years when we've been covering airlines, that Delta has been out of favor. They've always been the number one for business travel. And it's just a question of how well they can do with leisure, but it's not that important. I mean, they're trying to get those premium seats. That's where the revenue comes from. That clientele is who they're targeting, and they're doing a great job at it. Southwest definitely falling out of favor. I don't know if they've kicked in that new thing where they actually have assigned seats. I can't remember if they've done that yet or not. I haven't flown on them in a little while. But I think it's no more of the first come, first serve, which is probably welcome. That might help them. United, I know, is going to a more of a, get what you pay for. You can kind of a la carte menu type of thing. But Delta's, sticking strong with what they've got, which is you pay a little bit more, but you get everything. And I think that that resonates with business travelers, and then they rack up points, and then they're used to flying Delta. So then when it's vacation time with their family, they stick with Delta. That's kind of the business model. It translates really well. And going into this earnings report, based on what the stock has done, based on what all the data is showing, including consumer happiness, which is very high for Delta, we've got them at a plus 27. So we see them as slightly undervalued here. Long term, probably a strong investment at $50. But short term, I think that there's more than likely to have a positive reaction to this earnings report, just given everything that we see. I think expectations are fairly low, given what was said on that first earnings call, and the data that we've got showing that they're the best in breed. And even though the sector is down a little bit, I think everyone knows that. What they may not know is Delta's doing the best of all of those.
Yep, they got the best balance sheet. Landon, real quick here before we let you go, after that earnings score you gave us, have you guys seen any trends overall in the travel industry where we're seeing cracks? Because we all know the airlines are volatile. They're choppy trade. they're cyclical, they're seasonal. Have you guys seen any overall trends in travel as far as your data goes that shows it's weakening, like maybe some of the airlines reported on their last earnings?
Yeah, so for a long time it was pent-up demand, right, after the lockdowns. And it seems like that pent-up demand has been flushed out. So we don't see people looking forward to travel as much. Leisure travel, I think, is starting to wane a little bit. So that pent-up demand story is over. So that's behind us. But fortunately for a company like Delta, that's not what they're relying on. They're relying on business travel. They're relying on the economy doing well and people just picking up in that category, so in international travel. So I'd be more concerned for Southwest, not so much for Delta.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan. He's a co-founder of Likefolio.com. Hey, Kevin, we always talk about Ed Bastian. He's usually really upbeat on those conference calls. Last conference call, when he cut full-year guidance and lowered the current quarter guidance, he was relatively downbeat. I don't want to get on the political side of it because we don't talk politics. Hey, a lot of what he said is not coming to fruition. The bar is low in here. How do you want to look at Delta for an example trade?
I think for this particular name, Tom, the bar is pretty low. And I think how he guides for the second half of the year in summer travel, and that is going to really set the tone. And if you look on the chart, they sit right in between the 50 and 200-day moving average, Tom. And so, the stock has been relatively calm the last couple of weeks moving into this earnings report, Tom. What I did, I wanted to set a longer term trade here for Delta. And so I went out a fair amount of time. I went to the August 8th, so a full month I gave myself on this trade. August 8th, buying the 50 call, so buying basically the at-the-money call in Delta, looking at the expected move a little over $3. And, Tom, I went and sold the 54 strike in this week. So this is a call diagonal, stock replacement strategy, but more really a call diagonal because you're really buying an at-the-money call. But I'm giving myself a lot of duration and the opportunity to chip away at that net debit over time, Tom. I think with implied volatility out in August 8th, you're basically buying a 47 vol, selling 111 vol. And so, the second expiration, 68, 58, 51. So I'm buying about a 47 vol in August 8th, Tom. And then, the game plan here would be to just chip away at that net debit. When you do that, you chip away at the break even. It's a longer term play in Delta here, Tom, starting with the earnings release.
All right, let's break this one down. Call diagonal, bullish. You need a move on this one. Not a big move, but you do need a move to the upside. Buying the August 8th options that expire in 30 days. The 50 strike call, selling the near term July 11th. Weekly options that expire in just a couple days. The 54 call, $4 wide bullish. Call diagonal, you're paying roughly about a 260 debit is what we've got up there. That would be your risk, $260. Trading closer to 240. The stock has pulled back. And anything above maybe 51, 51.5 is going to be profitability on this one. Kevin mentioned that vol dispersion. That lowers the price entry point and risk on this trade because you're buying a lower implied volatility on aggregate than what you're selling in the near-term options. I think one of the keys with this type of strategy is as you get closer to expiration over the next couple of days, vol is going to most likely or historically gets crushed post-earnings. You want the stock to go up near 54, but anything because you're paying less than the width of the diagonal is going to be profitability above maybe 51, 51.5 on this type of trade. You do have some assignment risk on that short option going into expiration over the next couple of days also, so remember that. But the idea is you need to move to the upside. The option market priced in at about $3.
O sea, están hablando de un ejemplo de trade. Me choca cuando hablan así de ejemplos, pero pues sí, esa es la idea, ¿no? Que muestren ejemplos de lo que sería entrar en una posición y salir. Ahorita estoy viendo, o sea, siempre es así esto, ¿no? O sea, es un trabajo, muchos lo llaman como estresante, en realidad lo es, porque pues es dinero, ¿saben? Entonces es como, cuídalo, cuídalo. Si uno lo logra, pues está muy feliz, está como de, a huevo, se logró. Pinche rentabilidad del 20, 30, 40, 50%, ¿no? Ampa ya se está corrigiendo, a ver, esperen. O sea, no, a ver. Wow. De los 3 que estaba a los 8. Es una locura. Locura, locura, locura. Y EGG también, aunque seguramente... EGG aquí está, ya sigue suspendida todavía, pero pues también, o sea, no manchen. Si la están comprando en 5, venderla en 10 está bien. O sea, no hace falta ir más lejos. O yo opino eso. O sea, 10, máximo $11. O sea, sí, dicho por la zona de venta. Porque siempre pasa eso, cuando ya superan el 100% en cualquier momento las pueden suspender o haltear para evitar la volatilidad y que bajen. Entonces, pues tú ahí puedes tener una menor rentabilidad o incluso una pérdida, como el caso que les presenté hace rato cuando abrí el directo de Proc. Proc ya había terminado su rally y pues si la compras por aquí, pues no. O sea, no, mal. Pero fue lo que se hizo. O sea, anteriormente se había comprado aquí, pues chido, rentabilidad todo dar aquí, ¿no? Se pensó que iba a seguir creciendo, pues tómala. Pues no. O sea, la verdad es que no. ¿Qué más tenemos? CLBI. No, pues ya también. De punto 80 a punto 60 sería el 100%. El doble de la acción. Pero pues ya fue. Este. Este.
2,000. So we'll see if we can hold on to these gains. All right, let's get into a discussion about another stock that got upgraded. You can see the heat map there. A lot of red, a lot of green on that name, but being led by NVIDIA to the upside for sure. Microsoft also hitting fresh all-time highs in today's session. Let's get into that discussion about Caterpillar, another stock that was upgraded today. Stock's trading around $400 a share. But Kevin, this analyst at Melius put it to a buy from a hold, $500 price target. And you know what? The impact from China and the truce that we have with China right now, lending some support to these shares over the last month or so.
Yeah, I think when you look at this name and the fear that was out there about tariffs, about macroeconomics, about China exposure, all those things, this is just another thing, a story of a bunch of potential risks that never came to fruition, Tom. And so this company continues to just outperform, sitting, just what, a 0.5%.
Andamos que en $4 de ganancia acá.
Big
$5 de ganancia, $6 de ganancia, 100 pesitos. Pero les digo, esta se va a quedar ahí, porque justo aquí en esta pantalla tengo otra cuenta abierta.
Looks pretty positive for a stock like Caterpillar that, they missed on earnings last quarter, and they lowered some EPS guidance. But this company makes a ton of money, Tom, and they pay a healthy dividend when they, and this is a healthy company that makes a ton of money. So it did sell off with the rest of the market. But like I said, you look at 3 months, up 43% in the last 3 months. So the recovery in this name has been as strong as any out there, Tom.
Yep, all-time highs that we hit last November, about $418 a share. This analyst put a $500 price target on that. They did just recently hike their dividend also. But Kev, we got the bonus package here for you today here in Caterpillar. We got a couple different ways to look at this, kind of based on that note. The first strategy we're going to take a look at is going to be a call butterfly here in Caterpillar. And this is out in the August 1st weekly cycle. So it avoids earnings, which come that following week. Earnings tentatively set for the 5th of August. So going out to that August 1st weekly option series, so just about 3.5 weeks to expiration. We're going to buy one of the slightly in the money 395 strike calls. We're going to sell 2 of the 410 strike calls, and then buy 1 of the 415 strike calls. Unbalanced call butterfly to the upside, bullish, paying roughly about a $5.50 debit. It's trading a little bit higher, but if you pay a $5.50 debit, there's your risk, $550. Break even, $400.50. Stock's basically there right now. It's trading right now, so you'd have to pay a little bit more because of strike. But even above the 415 strike, it's going to be nearly a double in profitability.
Tom, this is the key to what I refer to as the modern day butterfly, right? Where you give yourself a directional bias, you give yourself a target, in this case the 410 call, but the theta is slightly positive. If it start moving towards 410, that theta number will get better. You're short a little bit of Vega on this name, right? Because you're short 2 of those 410 calls, but you don't give away your upside if you're right and it goes past that strike, Tom. And there's the evolution of the butterfly. You're buying a call vertical, selling another, but you're giving yourself a flat line above the zero profit line, Tom. And I think right around a 19.5, 20 delta is a more efficient way to do this butterfly, where you don't have to be as perfect as long as you're bullish. Remember, this is a bullish play, and it'll lose money on the downside. That's where the risk is, and the risk is the debit paid. But you're buying a $15 call vertical, selling a $5, Tom.
Yep, 395, 410, 415. Only about 2.5% to get up to that 410 strike. That's where the max profitability is. But as Kevin mentioned, anything above that $400.50 break even is going to be profitability. Your profit just goes down if it continues to move higher above the 410 strike, but you're still profitable anywhere on the upside above that break even. Now, let's look at something a little bit more conservative, still directionally bullish, but it's more neutral to bullish. We looked at a vertical here. If you're maybe a little bit more cautious with the stock just below those all-time highs. So using that same August 1st weekly options that avoids earnings, but you still have 23 days to expiration in this one. We're going to sell a put vertical for that neutral to bullish directional bias. Sell the 390 strike put out of the money by about $10 to the downside, and then buy the 380 strike put. This is a high-priced stock. They're not immune to market moves, so if you do get a pullback, you want to stay risk-defined in this, just like the call butterflies risk-defined. You know exactly what your risk is going in. Same here. You're collecting roughly on this $10 wide short put vertical about $2.50 credit, trading closer to $2.20 right now because, as I mentioned, the stock's moving higher. Wide bid-ask spread, so price discovery may be warranted on these type of trades because they can move around. Wide bid-ask spreads. But if you collect that $250 credit, that's what you can make, $250. You got $750 in risk, but that's below $380. Kevin, the break even on this one just at $387.50 if you collected $250 credit. So you got a decent cushion to the downside.
The August 1st 390 put, there's your shorting about a 2/3 chance, about a 67% chance probability of finishing out of the money, Tom. So yes, just like Alex's spread earlier in the day, a little bit on the aggressive side. But if you believe in this upgrade, if you believe that the downside in Caterpillar's limited, this is how you do it. You put on a traditional, a strategy that is a short put vertical, and then you slide those strikes a little higher. The trade-off, it's lower probability of finishing out of the money, but you collect more premium, Tom. So therefore, if you're right, you have a better chance of collecting more premium on that sale. So just a way to tweak the probabilities versus the credit taking in.
Yeah, and this goes back to kind of that discussion that we were having earlier when we were talking with Alex about his short put vertical, is that a lot of people feel like they missed these massive moves from those bottoms in April where, hey, you know what, maybe the stock never pulls back where you could buy it where you want to buy it. You can still participate using the option market, give yourself a cushion, and even if it doesn't go down, you just get to keep that credit that you collect on this neutral to bullish short put vertical. All right, that's going to wrap it up for us today here on Fast Market, but make sure you stick around right here on the Schwab Network. Next Gen Investing is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Puede, amigos, sí se puede.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, a broad-based rally today, although modest, but still green across the board, and green also dominating most of our tech coverage, with the exception being Apple and Tesla, as we do check in on things in the tech world. And also important to note, as this is one of the most important headlines, I'd say, of the session, is that NVIDIA now reaching $4 trillion earlier in the session.
Yeah, it's another pretty quiet session, but all in all, a bullish one, which is, I think, a good thing, of course, for the market when you put that into perspective. But it is a market that has sold off its highs by quite a margin. And to your point, NVIDIA really going to dominate the headlines once again.
It really is, and I think that it's frankly amazing when we're comparing the size of, I mean, a great fact is actually right now the bottom 216 stocks in the S&P 500, if you took them all out of their market caps together, it's still smaller than $4 trillion, which is what NVIDIA stands to close at. And right now we are seeing shares pull back from those record highs, but I mean, really a great story that we'll be diving a bit more into later on. As always on our show, we'll kick things off with some nice food-focused movers to get you hungry at this noon hour here in Chicagoland. We'll also be charting the various moves we've seen in Disney as well as Netflix in the media world, as well as talking more about NVIDIA for FOMO, of course, as well as Broadcom today catching an upgrade from JP Morgan. And we will close things out with Bloom Energy, which is a name right now seeing also an upgrade at JP Morgan following some overall turbulence right now in the energy and alternative energy space, of course, as a result of the big, beautiful bill.
Yeah, looking forward to that discussion later on. But speaking of alternative energy, we can get into some of our movers here, starting with Monster. Different type of energy, but certainly an alternative way to get some caffeine in the morning for those who crave it.
I mean, absolutely. So I actually was discussing this name with Nicole Petalides earlier today, and I learned something fascinating. So Red Bull was unveiled to the markets about 15 years before Monster Energy did actually release its brand of energy drinks. That was first in 2002. But Celsius was only about 2 years later. So I always just associate Monster and Red Bull as like the stalwarts of the energy drink space. But actually, Celsius just newer to the public markets, not a whole lot newer than perhaps even Monster. Just for some interesting context, but Rothschild today downgrading shares to neutral from buy. Price target was cut to 60, down from 63, citing the U.S. government raising its tariff on imported aluminum from 25 to 50% for the downgrade. While Monster, they did say, does still have hedges in place to at least delay some of the tariff impact. By 2026, they will be facing this aluminum cost inflation just as U.S. price increases roll off. So I think this is a really important narrative. Coca-Cola has been outspoken about this as well, and they're a major long-standing distribution partner of Monster Energy. So it definitely goes to show that it's not just Monster reeling from some of these tariffs, but something that's going to weigh on, unfortunately, the price of my beloved daily drink, which is a nice cold Monster.
Yeah, it is interesting to your point, too, about the Celsius history being maybe not fully understood, but they didn't launch a product in this energy drink space until 2009.
2:55 para que cierre la bolsa.
Despite being a company based out of Florida. So a little bit later to the market, but really what I've always thought about of Celsius is what it's done for this space to kind of tie it back to Monster. Like, what do you think of Monster, at least in its origin? You think of the limeish green, neon green claw, mark M, that is, of course, the logo of the company, in association with things like the X Games and snowboarding and skateboarding and action sports and motocross. And yeah, it was a good way to kind of bring, high energy, sports, high energy drink. But what did Celsius do? It partnered with a lot of podcasting and new media and streamers and all of those types of things that really, have done really well for a lot of companies that have successfully used them. But it changed the conversation to a healthy alternative or a fitness drink or something that could be taken instead of coffee, instead of tea. And Monster benefited from that.
It's true. And the great point there, where I feel like the key difference of the two is that Celsius, and now, of course, owning Alani Nu, targeted much more of that female Gen Z demographic, whereas Monster was definitely, at least in its inception, more male-focused, more sort of like the alternative games focus.
Motocross, the motorcycles.
You.
This is what I think of when I think of it.
That's exactly why I drink Monster. No, just kidding. I mean, I wish I could say that, but I've been a tried and true fan for far too long, and I think, unfortunately, maybe for my overall health. But as we know, when you talk about these vices, it's very difficult to trade down when it's a habit that you have formed, which I think speaks to some of the resiliency of our next name, which is Starbucks. Every single time I walk into a Starbucks, I am amazed at how much one single drink costs. I will admit I probably get like the most ridiculous drinks, but still an expensive staple at that, but definitely has its loyal enthusiasts, has had some company-specific missteps as of late, but some developments we've seen now reportedly attracting some strong investor interest in its China unit, with potential stake valuations reaching as much as $10 billion. So reports today indicated that close to 30 PE firms, both domestic and international, have now submitted non-binding bids for a stake in their China business. Again, valuations range between 5 and 10 billion. Most offers, though, leaning towards the upper end of that spectrum, according to reports. But the strategic review is reflecting the overall mounting pressures from some of the competition in China, which has significantly impacted their market position. Actually, according to an international data firm, Euromonitor, the company's market share plummeted from 34% back in 2019 pre-pandemic to around 14% in 2024. So Starbucks has said they do plan to keep a significant stake, and they emphasize any deal must make sense in terms of business and their partners, but they're likely to retain, according to these sources, about 30% of that unit. We'll have to see, of course, though, how this further unfolds.
Yeah, I think of Starbucks as a company that, does charge a premium for something that you can do at home, but it's the experience, it's the routine, it's the simplicity of being able to just pick it up on the go. It's certainly a company that capitalizes on, a working population. It was kind of an interesting time during the pandemic when, behavior shifts happened.
Sí, escuché eso, que Starbucks está tratando como de vender una parte de su negocio, pero hay un tema ahí de como de absorción de líneas de negocio en China. Y pues obviamente Starbucks no puede permitir eso, pero pues China, es el gobierno comunista por excelencia y eficiente. Entonces, pues a ver qué tal. Lo está pasando mucho. Miren la market cap de Nvidia, o sea, wow. Impresionante. Impresionante. Club ya tiene interés corto. Interés corto es que hay vendedores que quieren shortear la acción para que caiga. Además de 1.45, 1.84. Pues no está nada mal. Es literal el 25-30% de ganancia. Pero miren, sigue creciendo. Y va en viborita, miren. Este gráfico es muy fácil de leer porque ¿cómo se llama? Se lateraliza el precio, pero se consolida el precio, se llama aquí. Se consolida el precio y luego vuelve a subir. Se consolida y, o sea, en teoría, si esto es correcto, debería de volver a subir otro poco y luego ya caer. O simplemente caer. Vamos Aunque esta zona de aquí ya se ve muy cansada. Muy cansada y aquí la descarga. Pero no es que buen rendimiento, o sea, bastante bien. Justo esto es lo que yo busco. Que en China, que en las últimas sesiones no hayan tenido como tanto movimiento así y que de repente tengan ese gap. Eso es lo que yo busco. Entre otros indicadores, ¿verdad? Pero al ver esto, esta es una excelente señal. O sea, no quiero verla aquí como, por ejemplo, esta. Por ejemplo, aquí ya había subido en China. O sea, este gap ya había tenido China. Entonces el riesgo aumenta porque lo más seguro es que caiga, aunque como pues es casi lo mismo, porque por ejemplo, aquí no hay una subida que llegue hasta acá para que la vuelva a tocar aquí, porque eso también es muy peligroso. Pero ¿qué pasó? Que el gap aquí, este gap que saltó de aquí a acá cuando abrió China y estuvo creciendo todo el mercado chino, pues ese fue la descarga que tuvo. Entonces ya nos abre acá con más del 50-100% en cambio y pues ya se desgasta, porque también es bueno agarrar las jóvenes, es decir, con un 20-25% de avance a las 7:30, 7:40 de la mañana, hora México, que allá en Estados Unidos serían las 9:30, 9:40. Entonces es la importancia de analizar el gráfico, analizar la hora, también a qué hora fue publicada la noticia, que eso lo tengo acá en el Market Screener y todo eso, ¿no? McDonald's lanza nuevo spicy, picante egg muffin. McMuffin de huevo picante. Ok. Pues vemos. Al rato, si está aquí en México, al rato lo pruebo. Creo que ya es hora de mi otro café porque me tengo que ir a las 12:30. Me queda una hora todavía. Ok. Este. ¿Qué más tengo? ¿Qué más tengo? A ver, a ver, a ver, a ver, a ver. Ay, ay, ay. Voy al baño rápido. Mientras les dejo esto.
When I don't have to give up a bunch of time in a morning or while I'm on the road and I just want to get home. So McDonald's for that has always been consistent. And the big issue for McDonald's has been its price has gone up so much that it can no longer feel like you're getting a good deal, because going to an Olive Garden, yeah, it's going to be more expensive, but like the perception is that it's not that much more now. And so not that you're going to make the decision every day between do I want to get McDonald's or do I want to get Olive Garden, but if you're going to go out of the house, get food, there's places that are perceived as higher quality, better experience, that aren't that much more expensive at the moment. But when it comes from trading, we got 3 years up on the screen. $300 has been to McDonald's as like the mid to low teens has been for Ford. It's just like a brick wall it can't get through. It has spent a little bit of time above that, but it keeps coming back to this area. And so if I was looking at this from a trading standpoint, yeah, it can make a lot of sense for an investor just to have consumer staple exposure, value type of income investment. For those that it makes sense, it's defensive. But from a trading standpoint, 300 is just like the most important level. It's like a magnet. It goes away, it comes back from both directions. And until it proves otherwise, that's how I would look at this name.
Yeah, and to your point, still off of those highs by about 10% and some change. Well, being off lows by about almost 20%, so there's that to consider, but not looking as technically enthusiastic as some of our other high growth restaurant stocks that we frequently cover. So we'll leave it there for the food conversation on the show today, as it's making me very clearly hungry. But coming up next, Time to chart two names in the streaming and media world, those being Disney, which is slightly lower today, and Netflix, modestly higher here on the session.
Como ven, ya es hora del... Listo, ahí va. Y a las... Pues otro café, ¿no? Porque ya al rato voy a terminar hasta las... hasta las... ¿Cómo se llama? Madres. Ok. Hasta las 2:30, 3 voy a terminar. A ver si no llueve para ir a correr. Y necesito... Uy.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals with our chart master, Rick Ducat. Here looking at two names that operate in similar spaces, but very, very different all at the same time. We're looking at Disney and Netflix. And Disney today is modestly lower, about 0.8%, but has been in a really nice, recovery and nice uptrend really since we saw its last quarterly earnings.
Yes, like many stocks, a big swing to the downside, bottoming out in early April in tandem with those tariff announcements here. But as you said, a big recovery here. We are back up about 25% off of that low point here near the 80 level. For now, though, also looking like a breakout is still underway. You can see we have our two green lines here near about 108 and 115, marking the floor and the ceiling for the most part of this range here. That then became a further resistance point and then supportive area around 115 again there. So that seemed like a notable level to watch. We retested it, held on, and continued the rally. However, for now, we are stuck. We have established some highs near 124.69. You could draw this channel type shape here, one trend line going across the lows in the conventional way, duplicate it, put it across the highs. It matches up fairly well. You could use that as well to project some potential resistance around that same area. One thing many technicians may have taken note of, though, is bearish divergence on the RSI. This measures momentum. This tells us that the pace of the gains is slowing down. Price is making new closing highs, but they're getting less and less notable here. Not necessarily meaning a downswing is due, just that the gains are slowing down. Things are kind of shifting into more of a sideways framework for now.
Okay, so as we do zoom out and talk some bigger trends we've seen in Disney, we know it's been a long time coming that we've been hoping for this recovery, as things really were not looking as too optimistic into the end of last year. But now recently, what does the overall technical landscape really point to here for when we zoom out in Disney shares?
Well, roughly where we topped out recently, around our +1 standard deviation channel, 1 standard deviation up here from our blue linear regression line, our line of best fit. So some traders use this as a source of potential resistance. It happened to line up with some other stuff right around this area, so this could be a point to watch going forward. We can see that there was a volume node here around 118, also coinciding with these old high points here, so that could be a further support area. Down here too, 111, 112, we've got our linear regression line, our 63-day EMA, and our point of control for volume profile. All those come together right around 112. To look at a longer term chart as well, we have here a 5-year weekly chart showing, for the most part, price has held on near this 84 level, this green line here. There were some fluctuations, but as I said, for the most part, we held on above that area. 80 to 84 would be a key point to watch. The heavy volumes all the way down here at 91. We're pushing out of these heavy volume areas into the lower volume areas now. So perhaps, you know, the way is paved here for some uptrend if things continue.
Yeah, and I hope so, because it was a painful road to the downside, and then we've sort of chopped and bounced around, finally now finding some footing, although, again, lower today. So now when we do consider Disney here for example purposes only, of course, Alex, walk us through your thinking today. I know today is a pretty downbeat as far as its price performance, but at least recovering, which is something we haven't been able to say for Disney in quite some time.
Yeah, my thinking on this is quite similar to how I think about two names that you know well, which is Intel and NVIDIA. I see Disney as the Intel in streaming, and I see Netflix as the NVIDIA of streaming. Look at these chart performances, look at those two names. And so this is a name, in the case of Disney, that is struggling to get out of its own way, but it largely goes sideways in this range. And so we looked at a neutral bullish strategy for Disney. Not necessarily looking for more upside, but maybe it just hangs on to these levels. Looking at the 120, 118 short put vertical in the August 1st expiration. $2 wide. It's not a huge trade in terms of notional value at risk. But 66-cent credit is about a third the width of the strikes. You'd have $134 in risk there, Jenny. Chance to make 66, 119.34. But like Intel, in a time when streaming has never been bigger, one of the biggest players has lost half its value essentially over the last several years. So, you know, sometimes these performances are.
La vida me da una segunda oportunidad para vender.
And I mean, I know that they've tried to evaluate their pricing tiers. They've tried to take a page from, of course, Netflix, who has seen a huge benefit of all of those freeloaders now having to sign up for Netflix, which I can speak to on a personal account, but not really seeing that play out in the growth story for Disney at all, as we've seen, frankly, in a name like Netflix, which is now our next chart, fittingly so. And Netflix has been, again, I think perfectly illustrated by performance, quite a different performer, especially as of late. I know they've both made a nice run, but very hard to compare right now, Disney, to the behemoth that has been Netflix.
A different chart from many other stocks that we've seen recently too. The tariff news lows right around here, we pretty much held the line at these previous low points here. And then, you know, we've just been trending up since then. We were in the you know, mid to low 800s during those lows. But then you can see blue trend line here was broken, trending down here. From there, a pretty strong rally to the upside, mostly contained within the boundaries of these two white dashed lines. We did top out here, 1341.15, trending a little bit lower, but now we're at the point where we had the breakout and we are retesting the old highs here. 1262 or so, that was around where price previously topped out. It lines up with our yellow 21-day exponential moving average. So we have a supportive confluence there potentially that would be notable if price were to slip below that level. But, you know, perhaps traders might also be looking for this to be a buying opportunity if they think the trend was going to continue this type of pullback to support. We can see, though, that momentum is breaking down a little bit. Some mixed signals here. For a while, we had bearish divergence on the RSI. Then we had this breakout and push to the upside that re-entered the overbought level. Now, though, our short-term green trend line has been interrupted. We are approaching that 50 midline once again here. So I'd be curious to see what happens if we do break down below this level near 1262 or so.
Okay, and obviously this name was just recently right around its all-time highs. So when looking at these names again, that feels very unusual. I know we've had a few this week that were at or near all-time highs.
¿No lo quieren salvar? ¿En serio?
Not necessarily the norm for a lot of these tech names. So when looking at Netflix here, what else do you watch for as far as longer-term or big-picture trends?
Sometimes using the volume profile study can help find these important trading areas here. So you can see the spikes on our blue bar graph on the right side of the screen come in here, right around 1300. Here is another heavy area that lines up with our linear regression line. That comes in near 1225 or so. And then also down here once we start getting into 1100, 1150. So according to volume, those are the important areas here. So we also do have, like I said, the confluence of our old high point and our 21-day EMA, 1262 or so. If we were to keep moving higher, though, 1341, that's obviously the point the bulls will be looking to break above. From there, we could see our +1 standard deviation channel, 1 standard deviation up from our linear regression line. That would come in near like 1420 right now. Remember, that would be a moving target. That would be this is just kind of a snapshot of this moment in time, but it's one of the few tools we have where we can try to project potential resistance in these breakout moves here. But, you know, the longer term look, pretty darn good still, just kind of cruising to the upside. Quickly, you know, you can see how little volume there is here in the upper part of the chart because of how fast price has risen.
Yeah, and I definitely think that has been wide felt as Netflix continues to just make these new all-time highs in spite of the overall market not looking quite as strong. So really great insight here on two important names in the media landscape, two names that definitely do at least empty my bank account in some part due to the streaming services, of course, that just stack up every month. But all that to be said, now, Alex, as we do look to trade Netflix, we have earnings next week. So as always, one of the first to report. So we have that kind of list to look forward to here in the near term.
Yeah, very NVIDIA-like. A once mail-order DVD rental service is twice the market cap of the mighty Walt Disney. And so you look at that, NVIDIA, obscure gaming chip company, now the largest company in the world, a lot of similarities. But I looked at something. Look, we're talking about a stock now that trades $1,270 a share. It's going to move around. So I'll tell you what the goal of this trade was. And then from there, maybe prices have changed, maybe they haven't for this strategy. The idea was to look for, you know, a $5 wide, perhaps someone who's looking for a smaller trade, maybe $2.50 wide, call vertical if we're looking bullish. Perhaps a put vertical makes sense if you're bearish for next week because we have earnings next week. And the idea was to be as close to the current price as possible. And the idea being then, hey, there's like $100 of potential ups or down just based off where options are pricing things right now over the next week. Well, if I'm close at the money and I have a $5 wide spread and it's equal risk to reward, I can basically say, I think Netflix is going to be higher after earnings by the end of next week. And if that's the case, I can make $250 on my $250 in risk. And if it doesn't, I only have $250 in risk. And of course, the opposite could be true if you think it's going to be lower. There is just so much more things to consider when you're talking about a stock that trades at 1,280 than there is for stocks that trade at 100. And so with this in mind, there is just a way to think about it. A $5 move is essentially nothing for a stock that is this much. And so break even at 1,280, it's quite possible that it's going to be either substantially above that or substantially below that. So you're risking one to make one. And in this case, it's the bullish look at a company that has been on an absolute tear to the upside.
Es el inicio.
Okay, and I think also a very great point because
Bitcoin va a estar sufriendo un rato, pero va a volver a subir. El tema es cuándo. Ethereum está subiendo, entonces no hay como una correlación totalmente segura. Pero es cuestión de esperar. ANPA, EGG. Claro. A ver. Vamos a poner
It just
esto.
depends. I mean, it's been a
Y
roller
vamos a
coaster
buscar
ride, but it's been
proc
a
y
really
gain.
nice upswing for those who had the patience.
No kidding. And I'll never forget that day of like that 40% plus move to the downside, as it just felt wild for Netflix to make that large of a move. But thankfully seeing some signs of maturation, not necessarily making those same volatile swings, at least as of late. We'll leave it there for Chartmaster today. Coming up next, time to dive into $4 trillion. And that's the market cap NVIDIA boasts today, as it does touch now new records for the most valuable U.S. company. We'll also be discussing some analyst coverage with Broadcom and the broader AI and chip space.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly.
Mercados cierra en 2 horas y media.
I'm Nicole Petalides, host of Trading 360 and the
tengo que abrir a ver, espérense, porque ya está haciendo más calor aquí. Y también necesito como que cierta ventilación por los equipos y las pantallas.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
Le estoy preparando liquidez para mañana. Ya tengo la liquidez lista de 3 carteras. En una me hay que esperar. Tengo que checar.
Just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
The share, it's about a $10 billion deal. Those shares are up 20%. Market's up as well, almost 3%, interestingly. And an under-the-radar but fun call today, B of A just raised its price target on Shark Ninja because of the recent success, in part, of the F1 movie. They say the movie should drive global brand growth at a time when the company's focus on expanding its overseas presence, especially in France and Germany. Shark Ninja is a sponsor of the fictional race team depicted in the movie. And there's a new sponsorship idea for you. Shark Ninja shares up 2.5%. And CNBC Sport is out today with some new reporting on Eli Manning's possible bid for a minority stake in the New York Giants. Alex Sherman has the details. Alex, what's happening?
You know, Kelly, a few months ago, CNBC Sport broke the news that Eli Manning was interested in making a minority bid or a bid for a minority stake in the New York Giants. Now I'm here to tell you Eli Manning is out. I spoke with Eli Manning this morning, and he said, it's just too expensive for me. The valuations of various different sports teams, particularly the big ones in the NBA and the NFL, have skyrocketed even in recent months. The Lakers going for a $10 billion valuation, the San Francisco 49ers going for a near $9 billion valuation. So even these small percentage stakes, Eli Manning saying, look, even a 1% stake at a $10 billion valuation would be $100 million. That's just too much for me to afford.
Got to go with leverage, Alex. That's how you do it. You put in, 10 million. You get a couple of partners. You go to some kind of then you do the thing where the Mark Cuban thing. You refinance in yen. It lowers you. I think we've solved this for him. I don't see what the problem is.
You should buy a stake, Kelly. Yeah. You're talking yourself into it.
Eli, call me. Maybe not the Giants. Sorry, but we'll talk. Alex, thank you very much. Alex Sherman, we appreciate it. And now to Courtney Reagan for the CNBC News Update. Courtney.
Hi, Kelly. Well, the U.S. is intensifying its pressure on Iran. The Treasury Department today issuing sanctions on 22 companies for helping Iran sell its oil through a so-called shadow banking network. The department said the companies in Hong Kong, Turkey, and the UAE funneled the sales through offshore accounts to benefit Iran's paramilitary force, which has been designated as a terrorist organization. At a Senate confirmation hearing this morning, President Trump's pick to lead NOAA, Neil Jacobs, addressed the Texas floods. Jacobs said a forecast, no matter how perfect, would be useless if it can't reach the people. He added that he would look to modernizing the agency's weather radios and satellites to send warnings to areas with poor cell service. The floods have claimed the lives of at least 119 people. 3 people died in flash flooding in New Mexico yesterday. Officials say a 4-year-old, 7-year-old, and adult male were swept downstream by unprecedented floodwaters, while 4 people remain missing. Officials say the river that runs through a remote town about 180 miles south of Albuquerque rose to a record-breaking 20 feet. Kelly, these videos are really
so scary.
Hard to watch. It's really heartbreaking.
Awful. I agree. Courtney, thanks.
Thanks.
Coming up, one of our market guests agrees with the president, saying the economy.
Action. The new app would reportedly rely only on U.S. user data to train its algorithm, and that could potentially weaken some performance if the global engineering support from ByteDance, for instance, is reduced. Whether that recommendation engine that we have, the For You option, can be duplicated without China approval is still kind of murky, right? We know there's a political and trade backdrop around this as well. We know this follows that law that was put into place requiring ByteDance to divest TikTok's U.S. business originally was supposed to be for January of this year. One of the issues that we know was circulating around this was national security concerns, and there were bipartisan concerns around this tied to potential influence of China's government. Now, we know TikTok briefly went dark, and so in January, the hope for many users is that won't be the case this time around. So there is still some clarity that investors want to know about when it comes to how this would look in terms of a U.S.-based operation, or excuse me, I should say users would want to know. In terms of the response of some of the social media stocks, Meta is still higher today. It's got some optimism around it today, and it's been trading, higher overall year to date. It's not really moving the needle in terms of other social media platforms that we watch, like Snap or like Reddit.
Definitivamente necesito más
It looks like
potencia.
the market has descended like Meta from the social media conversation.
Tengo 2, 4, 6, 8, 10, 12. 12 aplicaciones con Drive serían 13. Por lo general tengo 15 aplicaciones máximo abiertas, no más. Entonces, sí hace falta más potencia.
$4 trillion market cap as it's the first U.S. company to achieve that major milestone.
Luego Excel se me traba, no entiendo por qué, o sea, y luego me pide, se dañan los libros, me pide cambiarlos, o sea, creo que ya llegué a un punto en el que Google Sheets sería la mejor opción, porque ya me cagó, inclusive utilizar el Google para, o sea, utilizar Chrome solo para eso. ¿Ahora qué otra vez?
Whether you're an
Sí, voy a abrir
experienced
Chrome y
investor
ya va
or
a ser
just
otra
getting
aplicación
started,
abierta.
Charles Schwab offers a webcast that's right for you.
Me voy a acabar
Are
esta
you a
computadora,
long-term
o
investor?
sea, me la voy a
Our
acabar.
investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk the biggest, arguably the biggest story of the day, because I don't know, the last time I've said $4 trillion as much as I have today. Of course, NVIDIA with that major milestone. Joining us is Marley Caden, contributor here for the network, and we're talking the latest with what has been a unstoppable, frankly, really record run for NVIDIA, now surpassing Apple's previous high market cap and looking, I mean, I know we've pulled back from highs, but new all-time high today, of course.
Yeah, as you said, they're first ever to reach that intraday $4 trillion market cap. Shares have pulled back slightly. As we're looking right now, we're still up about 1.75% on the day, trading at 162.85. That level they did hit to get that $4 trillion valuation was 164.42. For them to keep it at close, they have to close higher than 163.93. So that's the number they need to attain that. And like you said, beating out Apple potentially for that highest mark that they ever received intraday, and if they can close, certainly holding on to it. But it's important to note that Apple and then Microsoft, the other big name in this competition for that $4 trillion mark, had such a huge early advantage on them. They had such a head start. Apple first closed at $1 trillion in 2018. Microsoft hit that mark in 19. For some perspective, NVIDIA closed for theirs $1 trillion in 2023. So they've gone from $1 trillion to the intraday $4 trillion, and as I think we probably expect at some point this year, they'll close in that $4 trillion mark in just a 2-year period. So even without that head start, they're still just a behemoth on the move. And they are on pace, as you said, Jenny, that market cap for Apple was $3.9 trillion. It does look like where they stand right now, if they close just where they are now, they will surpass that amount. Right now they're trading at $3.97 trillion at the current stock price. So they do have to hit, I'm going to give you the exact number, 163.93 to close over the $4 trillion market cap. But where they stand right now, they will still close higher than Apple's record.
So here's a question for you. Is this one of those things that we like to talk about? It's a nice chyron on the bottom of the screen. Or do you think this is really anything more than, just one of those big round numbers that, we cross from time to time?
I mean, I think there's a little bit of, we all love a good headline, but I also think this is history. I mean, this is history being made. This is not the first time a company in a specific sector has hit this number. This is the first time in history a company has had a $4 trillion market cap.
I think the other key point, too, on this, and this is actually where I'm going to totally agree, is it also crossed Apple's line at the same time. Apple had just fallen short, so it's also like the most a company's ever been worth. And it wasn't like it was NVIDIA yesterday, NVIDIA the day before, and NVIDIA the day before, and we're watching it climb this mountain. It caught Apple passed it, and now it's potentially crossing this massive milestone as well.
Yeah, I mean, it's still ahead of Apple. Even if they close right where they are right now, and they've been trading pretty tight in this range that will secure them the record if they close in that range, they will surpass that record that was set by Apple just in December. But I think to your point, Alex, too, it's not a continuation story of the mountain climb for the same company. We're in constant competition with Apple, and Apple's market cap, I have it in here somewhere, currently they're in third. Microsoft is actually
almost a trillion behind Apple.
Yeah,
I know, almost a trillion, not even close. And I mean, this is a staggering fact to me, because I love to look at market caps, but its valuation now bigger than the combined companies of Broadcom, Taiwan Semi, ASML, AMD, Texas Instruments, Qualcomm, ARM Applied Materials, Micron, Lam, and KLA Corp. So,
and those are huge names. I mean, these are
They're like a
huge
Berkshire
companies.
Hathaway, a Tesla, a JP Morgan behind now.
Yeah, and it's like not even close. So yeah, I think that,
or 8 Starbucks, which was my favorite metric.
That's also a great metric. So I think that speaks to exactly why it feels like such a big deal. These are not small companies that we are comparing it to, and it's bigger than all of them combined. So $4 trillion, I can't even fathom that dollar amount, but appreciate it, of course, Marley Caden, for that wonderful insight on NVIDIA with a pretty record-setting day. And now to continue our broader tech conversation, I'd like to welcome in Jeremy Barnett, the CEO and co-founder of Rad Intel. So Jeremy, thanks so much for joining us today. I mean, big tech has been so fun to talk about as we've seen this nice recovery. What really are you watching? And I know that's a difficult question to answer here, but what really trends stick out to you right now?
Well, I think
Bellissimo,
I always
miren
look at what
esto.
Meta is doing. I think their motto is move fast and break you know what. So they're certainly being consistent with recent acquisitions, and they're kind of rolling things out a lot of times before they're even ready to hit the market. So I personally love that stuff. A lot of people have conflicted views on whether they do or they don't like what Meta is doing, but they're certainly a leader in the artificial intelligence space, and their tools are really helping small mid-market companies connect with their customers in more meaningful ways. So we really love what they're doing. And I think, if you look at what Microsoft is doing, Microsoft is still very steady. You're talking about Azure, OpenAI, LinkedIn, a lot of foundational language learning models that almost kind of take us back to what the cloud was when, Internet 1.0 was around. So we look at a lot of these foundational things as infrastructure that can help build
Ampa
these
fue la del
platforms
día,
that
o sea, se
ultimately
lució.
help
Yo pensé que iba a
either
caer, pero miren,
practitioners, people doing whatever it is that
una
their job
maravilla
entails,
total,
to not only become more effective,
absoluta.
but create more value for the companies they're working for.
Jeremy, one of the things that stuck out to me in recent months has been we're starting to watch this race become more and more defined in terms of the names that are committed to it and the names that are maybe looking for the winner. What I mean by that is I think Apple and Alphabet have sort of saw where they were in the race, and they seem to be trying to find, whether it's OpenAI or Perplexity or XAI or whoever it's going to be, that they want to be, kind of riding the coattails on in the interim. Do you think that's a trend we continue to see? I mean, you talked about in some of the things that you sent over to us, some of the consolidation trends you're seeing. Is that the next macro thing to monitor for AI?
Well, when you think about trends, I mean, everything always bolts into some sort of a commercial problem that the brand is solving to create some sort of product adoption viability. So when you talk about acquisition, you talk about consolidation and all the different opportunities in the space, it always boils back down to the blocking and tackling associated with what's the problem that's being solved by
Yo esperaba que esto bajara por la noticia, o sea, básicamente le están dando un precio intrínseco de $9. Entonces, vamos a darle permitir. Entonces yo me voy aquí, yo voy a ver una ganancia mayor. $7. La verdad es que no se compraron muchas acciones, o sea, imagínense, se compraron 13.21 acciones al precio de 7.54. O sea, 7.54 se tomó como por acá, o sea, imagínense. Ahorita está en 8.3 y ha dejado $7 de ganancia, que es un 6.5%. En un día, o sea, el 6% de tu inversión en un día no está mal, pero pues para mí es muy poco. De todas maneras, pues yo quiero que alcancen el precio de 9. Espero que lo alcancen. Y a partir de ahí, pues la verdad, pues sí ya vender, porque ese es el objetivo, $9-10 máximo. Pero bueno.
AI is definitely going to be a trend we continue to follow, I'm sure, for our foreseeable futures. I do also know there could be names that aren't as clear winners, perhaps, of the developments in AI as maybe the market's expecting.
Well, we think, look, really good creative is really good creative, and really bad creative with the addition of AI isn't going to make really bad creative any better. So if you really kind of take it from its pure context of why AI helps people be better at their jobs, whether it's in the creator economy or creating better assets to ultimately attract a customer, it's really about the quality of the people that are using these tools. So when you start thinking about these things, there's always this underlying fear of artificial intelligence is going to replace me at my job. And that's really just a falsehood. The risk as a person or a human that's in the workforce is not understanding all of the different tools, whether they're creative AI tools or tools that help you prep a proposal or tools that just help you better at whatever it is your job entails. If you're not fluent on these things, then you certainly run the risk of not having your job anymore, because there's other people that are going to be very fluent that are ultimately going to be able to get more things done. So the risk is not adopting as a person. And then if you think about that as a company, companies are looking to find more and more folks that are willing to not only adopt these tools, but utilize these tools in the different aspects of their business. So the creative economy as a whole, and that means a lot of different things to a lot of people, but if you think about it, it's trillions of different pieces of media that are put in front of us on a daily basis, and understanding how to influence these pieces of content in a way that matters to the target customer you're trying to attract. That's ultimately the space that RAD plays in. And I really think that that's where everything is going in the creative economy. It's understanding what people want to see before you spend the money on the thing that you're putting in front of them to attract them.
Hey, Jeremy, quick last thought here. As someone who's got a front row seat to these technologies as they're evolving, give us the medium to long-term view of where you see this going. It sounds like you see the workforce more augmented than replaced, so it sounds more optimistic than some of the doomsdayers.
I would say very opposite of quote-unquote doomsdayer. End-to-end automation with respect to campaign activations, end-to-end automation with respect to content and creative deliverables. We see a world where celebrities and influencers and influential personalities are going to be able, at the flip of a switch, be able to create a campaign that doesn't require production, that doesn't require scripting, that doesn't require all the back and forth negotiation associated with what a campaign looks like, and they would actually control their likeness from top to bottom. And in other words, they're deciding to license their likeness to the brand for a fee. They're going to control the production environment, because the AI tools that are out there that are showcasing the production environment in the form of an AI-created video look just as good as the real thing. So if you think about the amount of hours that are saved there, we see that completely being automated from top to bottom.
Yeah, and I can't wait for that. As someone that has taken far too many of those various Photoshop video editing classes, I think it sounds astounding to me, and it's definitely something that will be exciting to continue to follow as we go into the foreseeable future. But so appreciate your time today, Jeremy Barnett, CEO and co-founder of RAD Intel. But last but not least today, now time to completely shift gears away from tech and discuss Bloom Energy with some optimism from the sell side today. I'd now like to welcome in Sam Vadas, the contributor here for the network. So Sam, thank you so much for being with us today. Bloom Energy, a nice point of optimism to close things out on a bright spot.
Yes, absolutely. And look, Jenny, it's not too far away from tech, arguably, because something needs to power all those data centers as well. So I suppose you could use that thread to sort of segue into this company. But absolutely on a tear today as far as the shares are popping, double digits, up almost to 20%. And this comes off the back of a JP Morgan analyst thinking the company will benefit from the one big beautiful bill. So many off the back of what we saw on Friday had been wondering who would be the sort of big winners and losers from that. JP Morgan do say with fuel cells unexpectedly qualifying again for tax credits as part of that bill, we believe there is upside to consensus revenue and margin estimates beginning in fiscal year 2026. So that's when JP Morgan does reckon that it will start to show up in the numbers. They're also talking about with competing gas turbine pricing and lead time still elevated, the tax credit for fuel cells can push Bloom customers over the finish line, they say, driving order activity to increase. So they are very much optimistic, it seems, on increased demand for more price-sensitive and non-data center customers. They're also positive, it seems, on the ability to bring down costs. The JP Morgan analysts now expect the company's Q2 messaging to actually be relatively more upbeat than its peers. So if we talk about some of the competitors in this space, you've got the likes of Plug Power, for instance. That is also up today, so it does look like this is a good story for the sector. The folks over at JPM do also say the stock is trading at a discount relative to historical levels, which could present an attractive entry point for investors. They've upgraded overweight from neutral with a price target of $33 from $18, so nearly doubling the price target. It's sitting at $28 and change right now. But you know, as far as the stock is concerned, there has been a lot of talk about the fact that, you know, shares can be volatile. Moves this big, as we've seen today, are pretty rare for this company, which goes to show that perhaps what we're seeing here as far as the commentary is big as far as shifting the views and the perceptions around this business. We know that the fuel cell market is growing, as I mentioned, not to obviously mention the tech story, but also increased demand for cleaner energy. We've got on-site and stationary energy obviously being a big part of that business. Power outages have also fueled some of that demand. Outdated grid infrastructure also plays into the story. Everyone, as I said, is looking at the energy space very much as far as the AI story is concerned, but also gaining traction in transportation as well when it comes to buses and trucks. So maybe there are other opportunities for the broader space as well as other industries, guys. So expected to see a substantial growth here, certainly as far as fuel cell sector is concerned.
Yeah, nice to see this really nice move-in reaction. I mean, a really nice session today that has held pretty much throughout the day. So we'll obviously be watching where we close, but definitely a solid green shoot for Bloom Energy. We so appreciate it. Sam Vadas, contributor here for the network. And Alex, as we close things out, we are looking a lot of the same here with, hey, I'm not complaining. Green still holding across the board.
Yeah, no doubt. We'll see where we close, but a nice day. Another Russell 2000 day with the Russell leading the charge, 0.75%. Nice day all around.
Yeah, definitely. So we're closing out with, again, all of our tech coverage pretty much to the upside, with the exception of being now Tesla down 1% and Alphabet shares down about 0.6%. So we'll leave it there for Next Gen Investing for this Wednesday. Coming up next, we have the watch list.
Amazon, miren, $221.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. It's a record-setting day here on Wall Street for the NASDAQ. We've seen that hit a record. NVIDIA has hit a record. We have the Federal Open Market Committee minutes that we're waiting on right now. That's imminent, and we have a big show for you. Today's show will cover the real estate sector and how current lack of supply could lead to tailwinds for investors down the road. And we'll take a look at how the state of the bull market and the breakdown of the recent performance of the Mag 7. Our panel standing by to talk about all the tariff headlines. President Trump continues sending tariff letters out. Today is July 9th. This was the day on our calendars. It was after the 90-day pause.
97, o sea, ya estamos a nada porque 112 fue el último.
In the meantime,
Pero,
2 hours left in the trading day. The minutes are breaking from the last Federal Open Market Committee meeting. Right now, the S&P is up 1/3%. The NASDAQ 100 has hit a record. That's up 90 points. The Dow is up 126 points. The Russell up 0.75%. And when it comes to the sectors, you only have consumer staples. That's down 1.1%. But everything else, utilities, communications, technology, industrials, communication services, all winning on Wall Street. I mean, that's some great news there overall. And then here's a look also at Bitcoin and the rest. The 10-year bond yield's at 4.35, so that has come down. The VIX is at 15.91 behaving. The dollar 97.21 and oil 68.58 the barrel and gold at 33.17. So we have obviously a lot to discuss throughout this hour as we're waiting on the Federal Open Market Committee minutes. And here's also a look at some movers for you on Wall Street. NVIDIA rallying, as I mentioned, to new all-time highs today, crossing the $4 trillion market cap threshold, becoming the very first company in history to do so. Today's strength continues to build on NVIDIA's recent rally as shares have surged nearly 90%.
Ya lo volví, es que es demasiado. O sea, les digo, en $10 lo hubieran vendido, es el duplicado de la inversión. O sea, bueno, 3.50 sería 6 a 7. A 7 y ya 10.50 es el duplicado de tu inversión. O sea, hasta en 11 si quieren. Eso es una locura. Justo esto era lo que yo necesitaba.
Second quarter estimates and forecasting quarterly growth above expectations. TD Cowen sees continued video monetization and engagement gains driving upside. Meta also announced today its acquisition of a minority stake in French eyewear company EssilorLuxottica. That company owns Ray-Ban and Oakley's as Meta looks to grow its wearable tech business. Shares of Luxottica are up over 40% in 1 year. So pretty great moves there for Luxottica as well. So for the big stories, the Federal Open Market Committee takeaway minutes, we're going through those as well. Kevin Hinks, host of Fast Market here on Schwab Network, is taking a moment and going through those for us as well. Good morning, Kevin Hinks. Afternoon.
Nicole, we're getting the Fed minutes breaking right now. The general consensus is most participants assessed that some reduction in the target range for the Fed funds rate this year would likely be appropriate, the minute stated, but how many and when it was the big thing. A lot of the FOMC members saw persistent or were worried about inflation coming from the tariffs. So a lot of news coming out right now. Options range from a couple to just one. Different officials saying different things. Let's see, Michelle Bowman and Christopher Waller have gone on record as saying they could see their way cutting, but from the Fed minutes, it looks like they see rate cuts coming, but there's varying opinions. Remember, this was an FOMC meeting that saw GDP, in the summary of economic projections, saw GDP lower, unemployment higher, PCE and core PCE both higher, and the Fed funds rate unchanged at 3.9%. So that built in 2 rate cuts there, the 3.9% projections for the rate for the Fed funds rate. Now, do we get there? Do we start to guide towards a September rate cut? That's what we're trying to read in the tea leaves from the FOMC. And the minutes here, it looks like the minutes here still, they were very uncertain about the overall effects on inflation of tariffs, Nicole.
Yeah. It's, as you noted, a couple of the Fed members were open to a rate cut at the next meeting. So you noted that. I think that's interesting. They saw the higher real GDP growth than in the previous forecast. Inflation lower than the prior forecast. Do you think there's anything that really stands out here? I mean, it certainly seems like they're fine with the wait and see mode for the most part. Anything stand out? I don't really see anything that's screaming.
Yeah. Here's what catches my attention. Remember, this was June 17th and 18th, about almost exactly 2 weeks ago, right? And their expectations for the June SEP had unemployment moving from 4.4 to 4.5%. This was just, 2 weeks ago. And where does unemployment come in? 4.1%. It goes the other direction. So it just shows you that this is a snapshot in time of that Fed meeting, and actually.
Hay un desmadre con lo de las tasas, porque Trump ya las quiere bajar y Powell aún no. Su tecnocracia le indica que aún no. ¿Por qué suspendieron esta? Ok. Porque pues estaba en .78, 1.78 hubiera sido el 100%, o sea, ni siquiera lo logró, pero aún así pues es mucho para la acción, 225%. AMPA sí es normal que le hagan halt, o sea, que la relajen, porque pues no mamen, o sea, vean esto. Y esta es la mía, pues vean cómo va. O sea, de hecho, por esta acción, hoy es un mal día, para mí. Para mí, por las otras acciones que están en otras carteras, van bien, chido, pero esta fue la que me explotó en la cara. Y mi error, pues, fue a ver esto, que lo que explicaba en la mañana, que aquí fue demasiado gap, ya descargó esa energía que tenía la acción para subir, y pues sigue subiendo, pero yo la compro acá, pues no. Simplemente no. Necesito actualizar esto de acá. Así. Listo. Entonces básicamente estoy pagando los platos rotos justo ahora. $66. Pues miren, ahí va. No es mucho, pero ahí va. Ánimo, si se puede, si se puede. Iba a bajar un poquito esto. Ahí está. Si se puede. Oh, si todo sale bien, quiero comprarme un teclado que es de Lofre que cuesta creo que 2.500, pero es blanco, es totalmente blanco. Y el mouse de Logitech que también es blanco, el 3S, que es súper silencioso y es una delicia los botones que trae. Pero básicamente es ese. Y quiero tener como el setup, pero blanco. Traigo como esa idea de para renovar los juguetes de oficina. Pero pues a ver qué tal. Miren, Homes and Minutes Release, ya casi.
About investing in real estate and the asset class itself and how it's different from the public markets, which are pricing things daily. A lot of, anytime you're making a private market real estate investment, you have to think a much longer time horizon in terms of making that investment and seeing the benefits of that, the dividends. And it's a strategic part, but you have to think about it differently than the public markets.
Yeah, understood. I mean,
Igual al rato tal
also,
vez me
if we
llegue a
get some rate
conectar
cuts,
otra
I'm
vez
curious
porque hay
how
que
that
hacer el
might
análisis
feed in. By
semanal
the
y
way,
no
it
hemos
says
hecho
17th,
nada de eso.
18th. I was looking at some
Tengo
interim minutes
traqueado
from
el
the
índice de miedo y
2/17,
codicia
18 meeting. I
para
know that
publicarlo,
July's
pero nada
meeting is at
más.
the
O sea,
end
no hemos
of the
checado,
month for the
en sí
Fed.
tengo que checar los
Look,
rendimientos de
if
las
we get some
empresas
rate
más que
cuts,
nada.
does that help the housing market?
Y aquí me dice que no va a
I
llover
think
hoy,
there
genial,
will be an impact
para
on
ir
the
a correr al
consumer
rato.
side for single-family housing. I think that the bigger
Bien,
picture for
aunque todo puede
me
cambiar en
is
2 horas,
looking
¿verdad?
at
2, 3 horas, pero
the
a
real
ver qué
estate world
tal.
broadly, and just take here in the United States, for example, the amount of new supply that has been taken out of the market, if you will, that we are not talking about that enough. And the reason that new developments have stopped really around the country is because the math has not penciled. Normally, investors are looking for a spread between acquisitions and development. That spread's 150, 200 basis points of spread. And given what interest rates have done the last few years, even if they tick down a little bit, it pales in comparison to the 500 basis points that we saw at its peak. And so it's going to take a little more time for that math to make sense again. And frankly, it's a real opportunity to be buying right now versus building because that lack of new supply is a can that we are kicking down the road. And it means that with that constraint, rent growth will come into the system. And if you buy something today, obviously it's going to be worth more later because of there's just that we're not building as much as we should be.
So at this point, is real estate still a good investment? Our parents used to say, buy real estate, it always gains in value. If so, what kind of real estate is the best investment?
I believe that investors need to be looking holistically at their portfolio. They need to be thinking about diversification and the power of that. Certainly, you can make a great argument for all the different ways to invest, from fixed income to equities. The private markets in real estate, though, represent a very unique opportunity to invest in something that is working on a different cycle than the public markets are. And as I said at the beginning, a very important point to remember that it is a different cycle point. And investing in hard assets will do well in times that we're in right now. We recently produced a mid-year outlook, and in that, our research team really had to go back in time to the late 60s, 1970s to see a similar framework that we're seeing in the macroeconomic policy right now that we expect to continue for a bit longer. And in that world, the dynamics of how real estate behaved was very different than the last few years. And real estate performed quite well. Again, rent growth does come through the system, especially when you're not building new things like we are right now. And so making some smart acquisitions today will obviously pay dividends in the coming years, as again, the lack of new supply is palpable.
By the way, we talk about office properties, malls, senior real estate, these are the different kinds of medical. Those always seem to be the ones that people go to. I mean, there's ways to do this through, publicly traded ETFs and things like that. And then you could do private investing as well. I mean, are there ETFs that you like or ways to invest in real estate that are in the public markets that you could recommend to folks? Or should they call their broker and have a conversation about what exactly?
Yeah, the best answer obviously is to call your broker. You really need to make sure you're matching risk with risk tolerance and what your objectives are as an investor. So I'm not going to get into the specific product to highlight. I do think thinking about duration is really important. And certainly getting in, thinking about all of the different ways to invest. I mean, there's certainly office and retail. They all are different points of their cycle. And right now, our highest conviction is around living. And living is something that we think globally is undersupplied. The U.S. is probably about 2.5 million houses short. And living is also a sector, just due to the nature of their leases, which are really 1 year in duration. It's normally first in and first out. And also for rent, residential is particularly attractive as people are a little bit more concerned on where the economy is. And certainly where interest rates are to buy is pushing more consumers into the for rent sector at a time, again, where we're not building like we normally would be. Other sectors are interesting. They're just different ways to play. I mean, for us, office is interesting. We're focused a bit more on credit coming into that. We believe the market has overdone itself, and especially with the return to work that's now well underway, the best office is already showing in the fundamentals to be quite resilient and strong. In many markets that we track, the rents are at the highest they've ever been in some cities, and people aren't talking about that. But there are going to be winners and losers. Not everything is going to make sense, similar to what happened to retail. But the last thing I'd say is retail is a sector that has been through 15 years of evolution, and e-commerce has certainly had its impact. But at the end of that journey, it is beginning to make sense again, and we're investing in it. The lack of new supply, the destruction of retail, but also the omni-channel has begun to been reworked, and so it's making a lot more sense today.
All right, David Steinbach, thank you. CIO of Heinz, telling us ways to invest in real estate. Thank you so much. Coming up, Options Corner. Tom White standing by. He'll highlight the unusual options activity that we're seeing on this day, how investors are looking to trade on recent news of the consumer staples ETF. We were talking about that one being down today. Alphabet and Marvell. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual trades that we're seeing throughout the day. Tom White, host of Fast Market here on Schwab Network, is with me now, and I'm looking at the consumer staples ETF. I mean, this is the one area where we are seeing some weakness, and I was looking, I saw names in beverages like
Cerramos
Coke
en 1 hora 42,
Monster
pero yo me salgo en 20.
Hershey was down.
Voy a ponerle
Also, some of the retail names like Walmart and Costco. Is there something within that stands out? But I am curious about your trade, too, that you found.
Yeah, it was pretty interesting, Nicole, when I was kind of looking through this, when I saw the unusual option activity in XLP. And, the stock, the ETF's basically flat, up about 2% so far this year. It's been consolidating around this $80 level. It hasn't moved. And you always think, well, the overall market's, reaching all-time highs. Staples have kind of lagged a little bit. But I think there's fundamental issues within a bunch of the components. I think that's one of the key things that investors and traders need to look at when you're trading an ETF, the components within. that ETF. Like the XRT is a perfect example. Everybody calls it the retail ETF, but that would be the last ETF I would look at if I was looking at major retailers, right? Because there aren't many in there, and they're low weighted. Here, you got Costco, Walmart, they're about 9% of the XLP, Procter & Gamble, Philip Morris, Coke, Pepsi, Mondelez, and others that make up the majority of this name. The top 10 names make up a majority of this ETF. Inflationary pressures from some of these products. You had the rising dollar that was denting a lot of the multinationals within there earlier, even though the dollar's pulled back pretty significantly over the last several months. And then just the uncertainty out there from the consumer side of it. GDP growth had slowed, even though we saw a ramp up in imports, which kind of skewed Q1 GDP numbers. Those are supposed to start to rebound. And this is one of those areas that people like to go to when the market's at all-time highs. There's still a lot of uncertainty as a protection, right? Big dividend payers within this ETF. Sometimes gives it a boost, or at least it doesn't react maybe as highly as some other names if there is a drawdown in the overall market. But it did see some bearish activity in here, and this was out in the September monthly option, so about 72 days to expiration. Trader bought 30,000 of the 75 strike puts, paid an average debit of only 43 cents per contract on those. So the break even for this trader where they start to profit is about $74.57 to the downside. That's about 7% below the current share price in there. Put volume is about 8 times normal daily average volume that we've seen over the last week of trading. And this makes up basically about 80% of the put volume overall, just this one trade in there. Put call ratio is actually plus 20 right now, so it's skewed a lot towards the put side. But this could be somebody that's hedging, maybe in existing positions in some of these major staples names, or it could be somebody that's speculating that, hey, over the next couple of months, we're going to see a drawdown in this sector. And that's what this trader's putting on, a bearish bet here in XLP.
Understood. I mean, you're right. It really is the one standout. All these other sectors are in the green today, and that's the one that's down. You mentioned Altria, MO, right? What we know used to know like Philip Morris, but that's down 4% today, dragging. Thank you for that options trade on the consumer staples ETF. Now let's turn our attention over to Alphabet. In this case, you found a neutral to bullish trade on this Mag 7 name.
Yeah, this is in the Class C shares. GOOG is the ticker symbol here. Shares are down about 7% so far this year, but up about 25% from those lows that we saw in April. Still off, basically about 14% from the all-time highs. So it hasn't participated like the overall market has going to all-time highs. It's lagging in the Mag 7 names. It's got the lowest valuation out of those Mag 7 names, too. But there's a bunch of headwinds for this company. One of them came out today. OpenAI is planning to release an AI web browser, according to Reuters, sources say. That'll compete with Google's Chrome. And that could be big because the stock fell from that initially, went negative, now popped back positive on the session. But that might be a big headwind, along with the EU regulators, the fines that they've got, the Department of Justice may be going after them. Maybe they're going to have to divest the Chrome side of their business. So maybe a lot of headwinds that are causing the weakness that we've seen in the stock. And then if you look at some of the advertising names, WPP came out and lowered their guidance moving forward. That's ad spend, right? Is that in jeopardy right now? Because Google Alphabet relies a lot on digital ad spend. So that's those are concerns. But we did see a neutral to bullish position in here. Maybe a trader thinking that if the stock goes lower, I'm willing to buy it. If it doesn't, I just want to profit on the credit that I collected on this one. So a trader came in, sold 9,000 of the July 18th monthly options that expire in just 9 days. The 175 strike puts. They collected a credit of about $1.05, $105. So that takes a break even where the trader starts to lose money or has to buy the shares down to 173.95 over the next 9 days. That's about 2.5–3% below the current share price in Alphabet, and put volume about double normal daily average volume. So This is one of those strategies I think you're seeing a lot more of with the market kind of stretched at all-time highs. People feel like they missed moves in the stock, or maybe a stock's underperforming like Alphabet is, where they can sell out of the money puts, collect some credit, but they're willing to buy the shares if it does fall below that short strike.
And so many folks still feel like, as you noted, that the valuation on this kind of name is a little more doable and more realistic than some of the others that have really taken off. So there is value here. Okay, next up, Marvell, neutral to bearish trade you found.
Yeah, this has been fits and starts for Marvell. You know, in the AI space, this chip designer, you know, was supposed to be one of the big winners, but the stock's pulled back over 40% from those all-time highs that we saw in January, above $127 a share. You know, if you look at their growth rate, still pretty solid, but they keep giving basically muted outlooks for not only the current quarters that they post, but also for the fiscal year moving forward, even though their growth is supposed to continue as the AI infrastructure build out kind of gains. This was always thought of that like mini NVIDIA almost in the AI space, but it's been a rough stretch for this stock, but did see some unusual option activity in here also. And this was basically neutral to kind of bearish here, kind of stuck out to me. A trader sold 20,000 of the September 65 strike calls, collected an average credit of $10.85. They collected that big credit because these are in the money calls by over $5, about $7 below the current share price, this strike. So by collecting $10.85 for these, the break even for this trader where they start to lose money is above $75.85 over the next 72 days. That's about 5% above the current share price in Marvell. So somebody out there thinking, hey, this thing is not going to play catch up. It doesn't have room to run. Or it could be somebody, Nicole, that's hedging maybe a long stock position by selling these, you know, high option premium calls that are deep in the money at this point. But yeah, neutral to bearish. This trader just wants the stock to kind of maybe consolidate and stay below about $76 a share.
All right, you got a quick thought on the minutes from the Fed that you wanted to add?
Well, it's kind of what the Summary of Economic Projections kind of gave us. There's a couple members that said, hey, we're open to a July cut. Most of the members said that, you know, some of the risks for the economy were going away. They did say that there's still risk to tariff impacts out there. Well, look at the PPI and CPI numbers. Inflation has not gone up. It's actually come in below expectations. It's still above their 2% mandate. I think one of the key things you're going to have to watch after these minutes, Nicole, next Tuesday and Wednesday, we get CPI and PPI for June. If those numbers are not hotter than expected or start to show a gradual rise or a reversal from the previous three readings, which were below expectations, then the Fed might have to put July on the table because of the fact that inflation is not going up, and they keep talking about tariffs impacting, you know, inflationary pressures, and that inflation is going to maybe kickstart back up. Remember, Jerome Powell said it's a lag effect from when the tariffs were announced in early April, and he was centering on the June data. So that's going to be, I think, big, along with earnings that kick off next week.
Yeah, I mean, we were waiting for the big spike. The big spike in inflation from the tariffs. That hasn't happened, but many of the tariffs still haven't happened. So maybe he says, well, we can't look at June because the tariffs weren't in place. Now we have to wait till July and August. You know what I mean? Yeah. And as you well know, September is 67% likelihood. October goes up to 87% likelihood of a Fed rate cut. So we'll have to wait and see. Tom, great to see you. Thanks. Tom White, good luck there. Options Corner, looking at the consumer staples, Alphabet and Marvell today. Real options trades that he found today. Now we'll take a look at the markets. We'll take a look at the economy, some of the expectations, and the upcoming earnings season. That's important too. So we are just going to take a quick break here. The Dow is up over 150 points. The watch list continues. We'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back, friends, to the Watch List. I'm Nicole Petalides. We are live on the floor of the New York Stock Exchange. Got the FOMC minutes. We've gotten some tariff news bit by bit. We have a lot to talk about. David Kudlow, founder, CEO, chief investment strategist at Mainstay Capital Management, is with me. This, as the S&P is not too far off from that 6284 level, which was the high. We're getting closer and closer. The NASDAQ hit a record today. Some of your thoughts on what's going on here, and does it continue?
Hi, Nicole. I think it does continue. When we look at the setup for the second half of the year or third quarter of the year even, we have, you spoke about earnings just in the last segment. We're looking at consensus estimates of about 5% earnings growth for the second quarter. And a lot of that, that's guidance that came about because of tariffs. Right, because of the impact of tariffs, which we've seen that become a more diminished impact than what we once thought, certainly at the beginning of April, right, that set off the market correction. So I think we're set up for some beats, some good beats on earnings in the reporting season. We're looking at, will the Fed cut in July, September? They're going to cut in the second half of the year. And we just had this bill passed, which will have a fiscal stimulus impact that will buoy stocks as well. So we're looking for a continued advance, and we're constructive on stocks going into the third quarter and second half of the year.
So the second half is setting up nicely, as you noted here, and so you expect more highs. Do you expect high and then another high and then another high? You think we'll be sort of, can we clock in 5 or 10 highs between now and the end of the year?
Oh, certainly. Certainly. I think what we have to realize is, we're at a PE of 22. Valuation is not what we use to make a call on direction of the market, but we are richly valued. We could get a catalyst, maybe if earnings season does go as well as we think. If tariffs, we see a turn on tariffs, we've seen a lot of volatility created by tariff announcements, then they're diminished later. We could see a sell-off of 5 or 7% here in the third quarter even. But by the end of the year, we're looking, particularly for growth stocks, the AI trade, all that, it suffered in the first quarter of the year to continue to advance. And yeah, we could easily see 5 to 10 new highs for the NASDAQ and S&P 500 through the end of the year.
So at this point now, we're waiting on earnings season, which you say could be a catalyst, some clarity on the tariffs. We'll finally get some real tariff situations set. And what kind of investments should people make? I mean, I guess they're probably going to look out 12 to 18 months. What would you be buying to make money on these new highs? What are some of the themes?
Yeah, and this is what we like about this year. At Mainstay Capital Management, we're tactical asset allocators. So we're looking for opportunity outside the indexes of where we can enhance return and mitigate risk. And this is a year where you can do that. We've been overweight foreign stocks since the beginning of the year, particularly Europe, which had a good second quarter, a great first half of the year. Overseas stocks on average outperformed the S&P 500 in the first half of the year by 1,200 basis points or 12%. And we think we continue to see that in the second year with the advance moving from developed markets to being even stronger in emerging markets. So finally, after all these years, we have international exposure that's not only giving us diversification, but enhancing our total return of the portfolio. And also gold. If we look at the metals, gold, silver, palladium, copper now, with this tariff announcement, the metals are doing quite well. We think that gold is in a generational move. We've had a consolidation here recently, but we think that's just a consolidation before gold moves higher. So just looking at that, domestic, international stocks, and metals, we get a broadly diversified portfolio that has very good returns year to date. We think we'll have very good returns for 2025.
Yeah, and you know, I'll ask you about the earnings expectations here for the quarter because, for example, the Federal Open Market Committee, based on their prior view, said GDP will be higher than what their prior view was. That seems like good news. They also said inflation will likely be lower, I'm paraphrasing, lower than what their prior view was. Also good news. With earnings expectations, could they be higher than some of the prior estimates?
I think so. I think they could be higher for a couple of reasons. Earnings coming in better than guidance earlier in the quarter for second quarter earnings that was based on these really draconian measures in terms of tariffs. That April announcement was a shock to the system, and we've lightened up since then. The deals that have been done and the deals that will continue to be done on trade policy and tariffs. Also, if we look at with the tariffs diminishing, that's going to be, that was a concern for GDP. Certainly impacted first quarter GDP. We're looking for about 2.5% GDP growth in the second quarter, and in the second half of the year, definitely positive. These concerns about recessions, and we've said for the last 3 years, it's the recession that's always 6 months away, and we're still hearing some of that. But we think we're going to have a good year for overall growth for the economy and for stocks.
There are some members of the Federal Open Market Committee who disagree with Waller and Michelle Bowman and actually think that the appropriate path is in fact to probably just keep rates steady for the rest of the year. Could that be detrimental to your forecast of new highs?
It could be, right? It depends. Why do we get rate cuts? Are we getting rate cuts because the economy is contracting, is slowing, or is it rate cuts because of inflation? Or what we think is we probably won't get as many rate cuts in the second half as some expect. And the Fed governors and presidents that are we believe that are coming out very avid about rate cuts. That might be some auditioning for the position of Fed chair next May when Powell's term is up, because President Trump has made clear what he wants to see the direction of rates is to be cut dramatically from where it is today. So there might be some politics involved in there, and it'll depend. Powell said it publicly. Hey, President Trump, it's your move. It depends on what you do with tariffs will determine what we do with monetary policy. So we got to see what the ultimate tariff landscape looks like. From that, we'll be able to drive where monetary policy will go, and the markets and economy for that matter.
Right, but definitely overweight. You have the foreign investments, Europe, you said you've liked that. You still like that. Gold and silver and palladium, you still liked all of that. All right, David Kudla, great to see you, founder, CEO, Chief Investment Strategist, Mainstay Capital Management. Thank you for joining us on the show. Still ahead. All right, let's watch what's going on with this bull market. We've seen some new highs recently. And let's talk about the Mag 7 names. This is NVIDIA becomes the first company ever to cross and go and become a $4 trillion company. Meta's also in the news. We'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies.
Listo, muchachos, paso a retirarme. Tengo que ir aquí, a ver, tengo que hacer esto. Termino eso, a las 2 tengo otra cosa y tal vez es que necesito una persona que me ayude. Tengo mucha cosa administrativa y me estoy ahogando en esa parte y no quiero, ¿cómo sería? Descuidar el trading, los gap, los análisis, que es mi fuerte. es ahí en donde estoy yo. Y la talacha administrativa dejársela a una persona.
Welcome back to the watch list. I'm Nicole Petalides. Lance Roberts is with us, Chief Investment Officer, RIA Advisors. Thank you so much for being with us. So,
Absolutely.
Would you call this bull market? It's so hard to know when it started, but because we've had dips and pullbacks, but people bought those dips. So I don't know when you think this bull market started, but we are hitting record highs in this last week for the S&P and NASDAQ. Your thoughts?
Yeah, no, this bull market started back in October of 2022 and has been pretty much entrenched since then. And it's been actually it's been very interesting because we've seen just a tremendous amount of retail speculation in the markets. We've seen a massive increase in the number of retail investors getting into ETFs and single stock ETFs and leveraged ETFs. There's a lot of momentum behind this market, and there's nothing really stopping it right now. We saw recently the whole tariff kind of issue. That was quickly resolved. You had a near 20% decline followed by a 25% advance, one of the fastest in history. We haven't seen that kind of action since back when we had the pandemic shutdown in March of 2020.
So at this point now, when we think about the recent performance of the Mag 7, which many of these names have helped make the new highs on the major averages, names like NVIDIA, is there a name within the Mag 7? I mean, if you had to sort of rank them, do you have the 1, 2, 3 slot for the future? Not what they've done so far, that we can all look up, but for the future, which ones do you think are best position of the Mag 7?
Well, I think you were talking about two of them a second ago going to the break. NVIDIA and Meta, obviously, they're on the forefront of what's happening with a lot of the AI. Meta just bought Luxottica to develop their, the further development of their glasses. The future of AI and what's coming, this reminds me a lot. I'm really old, so I remember the whole 1999 .com bubble, et cetera. And this reminds me a lot of that. Back then there was a lot of naysayers about the internet. It's just a fad. We know what the internet's done since then. AI is pretty much in that same space. So, when you start thinking about the future of what you want to own, and I would look past the Mag 7. It's more of the Mag 3 as of late. It's been NVIDIA, it's been Meta, it's been Microsoft. Those are the players in that space.
Encontré mi bote de
Tesla
agua hasta
obviously has had
atrás.
its challenges this year. But then you start looking out
Listo, a
beyond
ver,
that. The power
ya el
generation
mercado se
companies, the
desaceleró, vendí
companies building the
posiciones, las de que
infrastructure
están a la baja no
for
las
these
vendí, al
big data
contrario,
centers,
compré
'cause these
más.
aren't just data
Cuando estaban a la baja,
centers,
por
these are
ejemplo,
data
aquí,
factories.
compré
And
aquí
the
en
bigger you build these factories, the more
1.08,
revenue you create
1.10,
from them.
ya está en
And this is going
1.12,
to be a
claro,
big
mi
issue going forward. The
mi costo
power
promedio
needs to
cambió a
back the
1.26,
infrastructure, and then not
entonces
only that,
necesito
but
que
then the
suba
developers of the AI themselves,
8 y
like Palantir,
6,
Palo Alto
14,
Networks,
necesito que suba
cybersecurity.
14
There's going to be
centavos.
lots of advantages
Ojalá
and
suba, porque si
opportunities
sí
in
la
this
puedo
market.
vender y ya me evito esa
And what do
pérdida.
you tell the people
Si
who
no,
want to see like
las puedo guardar porque liquidez hay, o sea, eso no pasa nada. Si no las puedo guardar y cuando caiga más la vuelvo a comprar para que se abarate mi costo de compra y no me afecte. Pero pues ya veré. Porque así como se ve, parece que sí se está intentando consolidar, pero luego es claro que se va a caer. Es claro que hay una que se está consolidando, pero hacia la baja. Entonces eso va a afectar. Listo, es bet. No, pues ya. También se vendió con ganancias, es buena, de un portafolio de un cliente. Pero ya también. Y sí, ojo, la compré aquí también. O sea, las compro baratas y las vuelvo a revender y así no hay pérdida. ¿Por qué? Porque el gap en estas empresas pues está... El gap es grow average. Se me olvidó lo de la P, pero es básicamente cuando está creciendo, crecen a la baja y crecen a la alza. Lo ideal es que crezcan a la alza, obviamente, como lo vimos con AMPA y con EGG. Cuando no pasa así, pues obviamente bajan, compras y vuelve a subir. Es en la mayoría de los casos donde pasa eso. Es como una segunda oportunidad, tienes un segundo chance para rescatar ese trade si llega a salir mal. Es una buena estrategia. Funciona siempre y cuando deje ganancia o incluso que des tablas, no recibas pérdidas de ese día. Te acabas el intradía, pero pues fue sin controlaste la pérdida. Entonces eso también es importante. En fin, ya me voy porque ya casi empieza esta onda. Mañana voy a hacer el directo, mañana ya es jueves. Chao, cuídense. Gracias por estar aquí, gracias por ver el screener y todas las empresas que ven ahí. No son ninguna recomendación de inversión. Pero para aquellos que saben qué está pasando en el mercado, se pueden subir esos trades. Y ahí se los dejo. O sea, les pueden ayudar. Pero pues ahí ustedes dirán, ¿no? Depende de cada quien. Gracias, chao.